Little Ennio Morricone to start us off. Ecstasy Gold. What do you think about that, Eastwood?
It's looking good. I had a nice buy. I put in for Yamana. So that's one of the companies I bought recently. Double position.
Yeah, that was one of my favorite companies. I had a really big position in those guys. I got out shortly after the purchase by Goldfields. I had a really long options play on them too that worked out really nice for me there. But that's a great company. So you're going to get some proportionate shares there in Goldfields. Welcome up, Jim. Welcome up, Alex. How you guys doing? Look, I'm super excited about gold and silver right now. We are primed to rip. If you guys follow my videos, you've likely seen the confluence that I found in the charts on, of course, the backdrop of the macro that we're looking at here. But now I'm looking at things like the commitment of traders reports. We're looking at some more historical analogs here. And remember, in my charts, I was finding two key periods in time. It was 2015 and 2018. Right. So some of these equities in gold and silver had a lot of confluence of putting in the kind of bottoms that we're putting in right now with the relative indicators like RSI, breadth, et cetera, all correlating to the same place in 2015. Well, if it wasn't 2015, then it was 2018. All right. And incidentally, here, when somebody else comes up to speak for a minute, I'll start nesting some tweets. But we're seeing the exact same kind of confluence in relative terms when the commercials go long in silver. And guess what one of those dates are? It's 2018. And so it's just one more element of confluence, I think, that's starting to appear here that shows us that we're here. I think we really are on track. I don't think we're getting ahead of ourselves at all. I think that this is the moment. I think we're coming up pretty quick. I think this is the stacked timber to remember, right? And we need to start taking advantage of this now while we can, because every passing day I see more and more of this confluence that's really telling us that we're here in the now, in the present. And we got to take advantage of it. So welcome up, everyone. Jim, how you doing, bud? It's always a pleasure to have you.
Thanks very much. I'll be here for at least an hour or two.
Well, very good.
Can you throw me on as a co-host? That way, if anyone wants to jump up, I can put them on.
Yeah, right on. Get you set up here. Okay. Give us 1 second, guys. Okay, so as promised, we were going to try to dig in a little deeper on a lot of these equities today, okay? And I know last week, Uranium had requested some information, knowing about more of the major producers, whether it's Agnico or whomever. And we've got some data here that we can go over. If you give me a second to pull it up. So I was actually surprised by some of these numbers. I know a lot of these companies are debt-free, but some of them have more debt than I expected. But the financials are still overall very, very good. So in the case of Agnico Eagle, let's see. Let me pull these up 1 second. Sorry, it's been a very busy day. I'm literally sat down when it was time to do this, and I didn't even have anything set up yet. So they're down to about 500 million in debt. All right, equivalent because they have cash. So with their cash holdings, they have an effective 500 million in debt. They think that this will be paid off by 2025. All right, and so they're in a really good position here. They've got 14 billion in assets, 6 billion in liabilities. They've got tremendous cash flow of over 2 billion. They had one of their best quarters ever just this past quarter. And they, if you listen to their earnings call, their Q2 earnings call, which I did, they were extremely bullish on their company. They actually expect to continue to find a lot more gold, and it's a very high grade gold too. And one of the most bullish things about the company that really stood out is how they've managed to hold their costs down, especially with all of this inflation, with all of these fuel costs. And Agnico Eagle kind of goes out of their way to try to keep an ESG presence, which interested me. I didn't even know that, but listening to the call, I kind of got a lot of those kind of insights there. And what they thought was that, look, to this point, they were able to manage the cost, but they do see them going up a bit in the future. But they should still hover around $1,000 an ounce gold, all in sustaining cost. And obviously, that's already very profitable. The company is a cash cow. I mean, they're producing 3.5 to 4 million ounces a year. These are some really big numbers. So this is a premium opportunity to get into a big producer like Agnico right now. Again, this is my favorite big producer. And after going through a lot of this, I don't think my opinion has changed at all. It was a great phone call to listen to. I'd encourage you to go check it out yourself. But, you know, as we get into, let me pull up my charts. All right. So, yeah, look, guys, I think this is feeling pretty imminent here. I think that the gold and silver charts look extremely good, and I don't see any kind of near-term weakness. All I see are oversold levels with strong bounces, with good volume. I'm seeing a lot of people step in to buy at these key levels, and again, you have these historical precedents. So I think in terms of time, we're here. You know, we could trade sideways. We could even take another little shot down to retest some trends again. I'm actually kind of counting on it. You know, I'm holding some reserve cash in the event that we do get any kind of a sell down. But again, when you talk to people across the gold and silver space, a lot of them are actually afraid to buy here. And I think that's a good indicator of more confluence of this being at or near the time. A lot of people have expressed to me that they're waiting on some kind of a larger drawdown and, you know, try to catch that knife on what's likely to be an inevitable kind of a V bottom. I mean, any kind of major macro event, any kind of broad market sell-off, any kind of fear or contagion, whatever would happen that would draw gold and silver equities down from where they are right now, you would have to imagine and believe it would be exactly the kind of event that would make you want to own gold and silver in the first place, right? So I am rather convinced that if we did get something like that, we would get a V bottom. I think it would be a COVID March 2020 kind of rebound all over again, which I'm sure a lot of you are familiar. A lot of these companies bounced from that bottom, you know, 500-600%, especially in silver, and they did it really, really quickly. And oh, what's up, Alex? Go ahead.
Oh, I was going to say another thing about the just the sentiment of the sentiment of the trade is that you know, not trying to knock if anyone was there, but you know, the silver conference, it did not look packed. It was, you know, Jabroni was there, and you know, he said he could walk up and, you know, talk to CEOs. He, you know, he could just, you know, do whatever he felt like almost. That it was just, you know, that's the marker right there when people are not excited about it. You know, there's you know, I've heard stories about Rick Rule. You know, he can't even go to the bathroom without someone tapping on his shoulder at a mining conference. So it's not that. It was the opposite of it. And you know, it's one of those I've always wanted to go to, but I mean, it's I guess the New Orleans one is coming up as well. But you know, that's just another way to gauge it. Is just look and see, are people excited about it? Are retail excited about it? Because I think retail is getting worn out by it. You know, they thought that, you know, again, a lot of them thought, you know, the silver squeeze thing, we're going to squeeze it. It's going to be a GameStop kind of thing. But it's not like that. It's not, that's a different thing. And, you know, it's good to have physical silver. It's insurance on your money. It's one of those that you never want to have to use, but it's there. It's something that, you know, you can pass on for 10, 30 years, 100 years if you want to. So, you know, again, just I'm interested to kind of see the New Orleans one. Do you think you might get up there at Liberty, or you are kind of toying around with it?
So I did some more digging, and I'm about 70% confident now that I'm going to go. I haven't bought the ticket yet. Obviously, it's 70%, but I'm pretty sure that I am. I just got to work out the details of my schedule. But yeah, the short answer is yeah, I actually plan on going now, especially I've seen the roster. I'm looking at the roster and it keeps growing. I mean, look, you're going to have Rick Rule's going to be there. Ron Paul's going to be there. Lobo Tigre's going to be there. Brent Johnson's going to be there. Right. And I mean, why would I not want to be there? I want to meet these guys. I have questions for these guys. You know, I would love to go talk to these guys. So absolutely. This feels like a really good opportunity for me. And it's so close that I could drive if I wanted to. Right. It's like, I want to go. I really do. So I think I am. The short answer, yeah. So I actually think it'd be great if any of you guys come along too. I think it'd be a lot of fun to meet and greet with you guys and just share some stories and hang out. But I've always wanted to do something like this anyway. And the roster that's going to be there, are you kidding me? Are you kidding me? Yeah, I'm going. So I'm going.
So, Jim, I have to ask you, have you been to some of these conferences or things like that?
No, I haven't. I watch as much as I can online, but I get up early in the morning and I have clients that I service, so it's hard for me to get out of town.
The one that I went to was Liberty or Freedom Fest. That's what it was in Vegas, and it's kind of a mix. But that's the one I've been to that one twice, and it was just amazing. You know, Doug Casey was there. Just a lot of people I look at, you know, it's just financial heroes and whatnot. They're just hanging out, and you can just walk up and talk to them. So I didn't really have as much to say, but it's. I think Liberty, if you do it, I mean, I think you got to do it. So if you go, or you know, when you go, are you going to just walk up to anybody, or are you going to get them on here, or what's the idea?
Well, yeah, I'm going to talk to as many people as I can. You know, for most of the people that are going to be there, I have questions that I wanted answers to for a long time, and that just feels like a great opportunity where I walk up and shake their hand. I mean, they kind of got to answer, right? I mean, I don't have to worry about trying to get them onto an interview or anything like that. I'll just go ask them to their face, and I would love that opportunity so much. Just the opportunity to speak with them and get a lot of these questions answered. So I am absolutely going to do that for sure. I haven't thought about it so much as the spaces or YouTube or anything like that. I'm just thinking about it personally, going up and talking to them and seeing what I could figure out and really get a feel for the space in general and what these people are like in person. And, you know, they say never meet your heroes, right? And so it'll be interesting to see how it goes. But I'm very much looking forward to it.
That already happened, though. You already met Ron Paul, so.
Well, he was a great guy. He's even better in person, I got to say. I find no faults in Mr. Ron Paul. I love that man.
Could I address one thing? You were talking about Agnico Eagle and maybe some silver producers. If folks in the room have got ability to look at the silver chart, you know, back 6 months or 8 months or so, we have come down from about $27 to under $18 in the last 6 or 7 months or so. And if some of the silver producers now, the miners, as I'm talking about, if they're breaking even, or let's say they're making $1 an ounce at $18, well, I'm kind of on record late this last week, probably Thursday or Friday. I've got a few posts out on Twitter that I'd like to see this silver market move basis December through $23, and it starts to look, you know, like the chart is improving nicely. And Liberty, if we can get to $23, that's $5 up from 18. We're about 18.70, let's say. So call it $5 plus, 23.50, 23.70. You take a producer making $1 an ounce, all of a sudden he's making $4 or $5 an ounce. So his net bottom line is increasing percentage-wise very, very nicely. And some of these producers, they trade on a multiple of earnings, a PE ratio, they call it. They've been beat to poo-poo here in the last 6 or 8 months. I don't have to tell anybody in the room that's holding any mining equities. It's just been terrible. But if we can see $23 plus in the silver and then 28 again or so, these silver miners start to add value back nicely.
Absolutely. I am looking at the chart right now. You know, we are actually at resistance here at about 1890 or so. And I think if we can just get that close above that trend line and hold it for a little bit and test it a couple times in advance, and I think we'll be well on our way. But again, all of the commitment or trader reports are starting to look quite good. You're starting to see a lot of net longs. Again, there's so much confluence in the charts and the equities that, you know, it might not be this week. You know, I'm not saying that at all, but I think that this moment in time, in the near future, I think we're going to start seeing this. And you even see, look at the Dixie. I mean, it is starting to roll over a bit. We had talked about that. It was showing divergences on the RSI, and you're starting to get the roll off. Now, how far it comes down, I don't know, but it's got another major leg of support, about 103. And being that it's so overextended as it is, when I look at it on the weekly, I can absolutely see it coming down there. And it's got the 50 moving average at 101. So if it were to just gradually kind of make its way down to 103, you'd have a good confluence of support there between the moving average and the horizontal support. And so I can totally see something like that playing out where it'll catch a bid there. But that's some good downside, $5 on the DXY. At the same time, we're getting these setups here in the miners themselves. So if anybody wants to come up and speak and participate, ask questions, chime in, share some input you found out in the world, just whatever it might be, maybe something about the macro, anything going on, feel free to come on up. You're welcome to do it.
I know Austin is bullish. He put out a really good tweet today. And people that don't really make these long tweets, they don't kind of understand how long they take, but it could take a while to put like a string together of 10 or 15 tweets or whatever. So it was really good. He's just talking about silver, and it's we'll have to nest it or something, but it was a good little. I retweeted it earlier.
Yeah, Alex, I kind of talked about that commitment of traders a little bit yesterday as well. On Friday, they come out around 4 o'clock Eastern, around there, and we did get confirmation yesterday. They run, for folks that don't know, they run through Tuesday's close. They get reported on Friday, and there was, I guess, evidence that the commercials are net long now in silver. And I kind of addressed that in a tweet or two yesterday on my Twitter account, that if we can now get those folks, those commercial folks, to see the potential upside versus downside, and I kind of mentioned that maybe there's $1 downside from here. We know we can go down $1, but there's $5 upside or $6 upside. And the neat thing is, if we can get those commercials that are long now not to resell this time, that all of a sudden we could be $28 or $30 plus in not too long a time. And that's the key, that what moves this price is flows of funds. And if we can just get those commercials to realize, and I'm sure they do, they're as smarter than anybody in the room here usually, that I guess that $1 upside is $5,000 a contract on a silver contract. So multiply that times $5 or $6 upside, and if we can rest there a little bit, and then maybe see $28 or $30, and then we can go $30 plus. And the whole key is trying to get those commercials not to resell again. And if some of them are net long, maybe they can take a look and they can enjoy some profit upside.
Right on. I'm right there with you. We're going to bring up Eric. Welcome in, Eric. Good to have you, buddy. How you doing today? Oh, you're still muted there if you want to talk.
Oh, can you hear me?
Yes, sir. Good to go.
Yeah, so I said I was sunburned. I was at the Alabama-Texas football game today, just dragging it a little bit.
Yeah, right on. I'm taking the boys to a ball game tomorrow. We're going to go see the Astros play. So
good.
Going to go check that.
When we're talking about silver, I'm incredibly bullish on silver, gold, and platinum. You just look at the COMEX and the LBMA, and everyone's getting drained. And usually when people start seeing this draining, it starts accelerating down. Just like you have a parabola that goes up, we could have a parabola that goes down in terms of inventory. I'm pretty bullish on platinum and silver more than gold. But there's a few plays that I like. There's some good hits out there, and you can play the basic stuff too. I just think everything's going to win. And I think this time, just because of the depleted inventories, you could have another rocket shot like we did from $12 up into the upper 20s, where we might go from, let's say, 17, 18, and finally start smacking against that 30 resistance or break it. We'll see what the big boys let us do, but it looks like it's primed to do it.
So what is your core holding strategy? So do you like streamers, majors, options? How do you play?
I like it all. I just don't have. I can't kiss all the girls. I want everything, right? But the way I'm playing it now is I've got a couple real small juniors. Like I like a company called Silver One out of Nevada, and then I'm taking a real look at buying some PLG here this next week out of South Africa for platinum. So, I just like to look at guys that are just really beat up. And, some of these stocks were 50, 60 cents, not like Silver One was 50, 60 cents not too long ago. And now it's at 22 cents. And they've had some pretty nice drill intercepts since. So I just see very little downside with these guys and a lot of upside. My ultimate scenario is I'm more in uranium, a lot more than I'm in the miners for gold and silver. I just want a good bop in uranium and then I'll rotate.
That's the same exact thing I'm trying to do. And it's interesting because Patrick Kareem at Bad Charts, he's kind of thinking that might happen. So that's my fingers crossed scenario. Like you go from one to the next and, you hit one and hit the next right afterwards.
Oh, exactly.
Hey, that's what I'm doing.
I wish I would just had the foresight, earlier this year. I was really up on a few of my uranium stocks to trim the positions and then just rotate into oil. I could have just made a flat out killing. I looked at like Devon Energy as one of them. I just didn't do anything and then watched it go another 6x, versus what I'd already made in uranium. It would have been pretty spectacular. Instead, I took a 50% drawdown.
Yeah, and that's the powerful thing about ratios is you could find these imbalances. The GDX right now is oversold to pretty much everything. It's oversold against uranium. It's oversold against energy. It's oversold against tech. It's oversold against copper. It's oversold against the DXY. It's oversold against the S&P. It's oversold against gold itself on a historical basis. And the GDX is even oversold against itself using technical correlations in the past, the extent to which it's currently oversold. So, this is the perfect time, I think, to rotate into the sector. And especially, look, I try to present this information to some people and they're just not having it. It's like, I'll wait for the flush down. It's like, it just really adds another level of confidence for me. Honestly, you almost can't give this stuff away, it feels like.
Yeah, I think, it's one of those deals that it's so bad across the space that anything that you buy, you're going to make money. It's just to what degree some are going to outperform others naturally. But I think it's extremely low risk here in pretty much anything you buy.
This is my absolute favorite type of trade. It's like there's misery and blood in the streets. Just pick up anything you want and you'll be fine. No, you don't have to do that much due diligence. You can get a newsletter or two. And this is it. This is the exact type of trade I like.
Oh, yeah. I agree.
So Austin's got some due diligence he's been working on a particular company. What's up, buddy? How you doing?
I'm doing good. What about you guys?
I am on top of the world right now.
Yeah, I know. Man, I'm with you, Liberty. Like, I know Liberty pointed this out in one of his videos. Maybe it's like a month back, but this is one of the best setups I've ever seen. Just like in silver, just like looking at the historical, just like runs previously. What I'm trying to do with the post today is I almost think that maybe we kind of only tell half the narrative in this space. And I think it almost just gives people the wrong impression. And I'm scared that a lot of people are just gonna miss this thing. I think like silver is very emotional, right? For a lot of people. And I think when you get so caught up in what the Fed's gonna do, when they're gonna pivot, when inflation's gonna pick up, you kind of just miss the broader story in this thing. There's a really strong fundamental case for this. And I think in the data between the SLV lease rates, it's the metal coming off the exchanges right now, the big banks are going long. I think they're all ramping up for it, and just when the reasons to own this stuff happen, most of the easy money is going to be made. It sounds ridiculously bullish, but I really, really believe it. I'll be shocked if you buy just a handful of just the top miners. I'll let you make your own call on what those are. I have my own opinions. That this next year, you're not looking at a double minimum. These things are so freaking cheap.
Yes, they are. I mean, just look at how many of these equities are below their March 2020 levels. I mean, think about it. What does the world look like now compared to then? Yes, we have some inflationary pressures. Yes, some costs have gone up. But the world, in a macro sense, is much worse now than it was then. If anything, these prices should be much more elevated to a much higher gold and silver price. And so it stands to reason that it's about to get its due. And again, when you compare gold and silver to any other asset class, it's oversold to virtually every single one of them. And it's very rare to find something like this, right? Very rare. So I'm very excited about it, and I'm looking forward to this run. It does feel pretty imminent here. And, we have CPI data coming next week. I think it's on Tuesday, the 13th, I believe, if I'm not mistaken. And then, of course, we have the Fed meeting the 21st and 22nd. So we've got a near-term map to chart our route here over the next couple of weeks. There's a lot of big news on the way. I'm starting to wonder, it's been my call for a long time that this next hike would be the last one. And I didn't think that they'd raise more than 50, and the market's giving them 75. I just almost wonder what happens if they don't take the 75. I really do. I'm starting to wonder. It's very interesting. But again, we've gone over this before too. I don't really care about the Fed anymore. I think that ship has sailed. I think that the world's a different place now. And if and when the Fed pivots, which I do think they do, you're not going to care for the same reasons that you would have cared months ago when the market was playing chicken with the Fed. And the pivot would have meant more like, okay, we're not really serious about this tightening cycle. The party's here to stay. We're going to fill up the punch bowl again. That aspect of the pivot is gone, right? I think that the cake is baked in terms of damage and the unraveling. I mean, this takes time to unravel, right? It takes time to really feel the pressures and the damage from the hikes. And then you have everything that's going on abroad in Europe. And it stands to reason to me that the Fed, especially after their little Jackson Hole stunt, where Powell admitted, he came out, it's like the second thing he said is an 8-minute video, right? And he spent like 5 minutes telling you that there was nothing he could do about any of these prices. And nobody's even talking about it, right? He even addressed the fact that he's approaching this from a psychological perspective, right? Because he wants a reverse wealth effect, right? He wants to stop the perception of inflation, though, so that it can not continue as a self-fulfilling prophecy, which it does. He's right about everything he said about that stuff. But the fact that he said it out loud is a testament to where he is in his head and where they are in their goals. And it's all narrative, man. I mean, this is I think that they're at the end of the rope, and quite frankly, I don't care anymore. I think that, if the Fed's been the elephant in the room and that everybody's been paying attention to, then the mouse scurrying around on the floor is the power of the purse. And if you look what's going on in Europe, they are already preparing massive spending bills to help with the inflation of these energy prices. And so this is obviously not going to fix anything. They're about to spin themselves into oblivion. And I just think it's really clear what's coming. And of course, the more they spend, the lower rates will need to be to continue to fund the government. So I'm pretty sure we know where this is going. I'm ready to move forward to the next chapter. Everyone else can stay behind and wait for the Fed pivot to make a move. I think we're an extraordinary opportunity here to get ahead of that and get in while the getting's good at or near the bottom. That's really how I feel. And I'm pretty confident in that.
Oh, 100%. Like, I think it's like where just like a lot of this goes, is like is misunderstood. Like I've spent this like a lot of time just like looking at like when this stuff bottoms, when it takes off, right? Like the odds of silver and gold bottoming when Jay Powell gets up there and says they're going to get cut rates is very, very low. The smart money will have sniffed this out well before that. And I have a hunch that they're doing it right now. Right. And I think people just like look at even just like over COVID, like, wow, inflation came and just like silver and gold went down and the miners went down or stayed flat. This doesn't work. No, guys, no. It works as an inflation hedge. This market is just working so far ahead of you. When the inflation comes, they're taking their profits and they're waiting for the next one, right? So that's why I feel so strongly that, hey, maybe Monday morning is not the right time. Maybe there's another flush, but I think it's very, very soon. It's going to be well before the Fed capitulates, right? It's just like if you look at COVID from just either 2019 or anywhere down the road in the crash, like it worked as an inflation hedge. It's just it priced the inflation in before the inflation occurred. And I don't know what the main driver of this, whether it's going to be inflation scares, whether it's going to be something else entirely. But by the time the reasons to own this stuff are appear in the mainstream media, a lot of it's going to be done. So that's why I feel very strongly that now is the time, and like why I'm attempting just to make like a more just like fundamental industrial argument instead of just like having to deal with what they're going to do with QT and interest rates. Because I'm with you, Liberty. I think you have to fade the Fed. I don't think it matters anymore. I think that this is going to be very different in the GFC because you already look what the governments are doing around the world. Yeah, they're raising interest rates, but the money printer is going burr. Like they're spending money on green energy initiatives. So not only are they already debasing the currency in an inflationary recession, they're spending it on stuff that uses silver. And for that matter, it's not just silver, right? It's copper, nickel, pick your industry. But that's why I just like people. I think people are just like are expecting that we're going to go 60% down and it's going to be just like blood and fire. And I don't know. I wouldn't put my money on that. I just think that they're the fiscal side. They're going to print and print and print, and the entire Fed argument just it doesn't make sense to me, right? It's just like, if QE doesn't create consumer price inflation, which I agree with, why the hell is everybody all concerned about QT and interest rates for consumer price inflation? It's the fiscal side, and they're still doing the fiscal side. So pay attention to the fiscal side. Don't even pay attention to JPOW, in my opinion.
Austin, in support of what your opinion is here, that if the way I try and analyze markets is a risk versus reward. And currently, looking at the silver chart, if you've got access to one, basis December futures, there might be $1 downside. But I mentioned a little bit earlier in the spaces this evening, I think there's $5 and then maybe $10 upside. Well, exactly supporting your opinion on some of these miners that have been so beaten down, if their net margins can go from $1 an ounce to $4, $5, $6, you're going to see exactly what you're saying, Austin, in support of what your opinion is. You're going to see these mining companies roar back, and we start getting over $29 or $30 silver, and you'll see before a year is out, you'll see those producers doubling. That's my opinion.
100%. If there's only $1 downside from here, I'll feel like I bottom ticked the thing. So that's music to my ears.
Yeah, and also remember that here in the next week or so, if I'm not mistaken, we should get some good data from the Fed in terms of their tightening. Because remember, September was when they were supposed to really ramp it up and start that QT. And if you don't see, 30, 40 billion by the middle of the month, then they're obviously not going to hit 90, right? And that's going to be a real clear indicator of how serious they are and what comes next. What's up, Uranium? Go ahead, buddy.
Hey, thanks, Liberty. And thanks for the info earlier about Agnico. And, I'm interested in all that good cash and debt analysis and trying to figure out who's strong and, who might be a little bit more exposed, who's higher risk, who's lower risk. And I guess my question is for you. I know Austin is silver focused, and it maybe Jim is. I shouldn't say silver focused. Prefers silver, let's say, and I think Jim might prefer silver. It sounds like Eric is preferring silver and platinum to gold. And I guess in my mind, I don't have a fix on whether or not you have a preference for one of the PMs, one class of the PMs over another. Do you have a sense? Are you in on this, like kind of silver primary focus thing? Do you want to talk about that?
Sure. Great question. So my preference is actually gold, and that's for the kind of long-term and just the safety of it. It has a better chart. It's structurally more sound, and it has more tailwinds in the face of this macro. Now, silver, in my opinion, is still money, but it has that industrial aspect. Now, I'll tell you this. In terms of upside, nothing is going to compare to these silver equities. I don't care about uranium or nothing. Silver has massive more upside. All right. So when I build my portfolio, I have a focus on gold in the long term, but I feel like I'm really going to make all of my money, per se, in silver. And so I don't know if it's 50-50. Honestly, I'd have to go check and see what my positions are and add it up. I was actually surprised after I sold a lot of uranium last week. I added up to see how much I still had. It was 24%. I was like, God, I didn't realize that it was even as high as it was. So I probably ought to go do that and check anyway. But the short answer to your question is that I think gold is the safer play with plenty of upside. But if you really want to hit a home run and retire early, the play is going to be in silver. I think that they're both set to sail, right? I don't think there's any risk of picking silver and missing out. I mean, they're going to run together. They always do.
Liberty, could I weigh in a little bit?
Absolutely.
All right. Thanks very much. Uranium, here's kind of my value-backed opinion for you, if in case you have any interest. There's a well-known chief executive officer that everybody knows that's of a prominent silver mine, and he's on record saying that there could be triple-digit silver in the future. Well, simple mathematics means that's 5x, 5 times on the level of silver, the underlying stuff that he digs out of the ground. He says it comes out of the ground 7 ounces to 1, and it's priced earlier this week. It was 93 or 94 to 1, meaning uranium, it takes 94 ounces of silver to buy an ounce of gold. Late in the week, that got traded back down to 91 time. So 91 ounces of silver to buy an ounce of gold. That's how they're priced. So the reason, I guess, that I opine on silver is from a value-oriented opinion, that if silver just got way overdone on the downside, gold in 2002 was $200 an ounce. Okay, it's 10x, $200 an ounce. Silver, twice in its life, uranium has been to $50. It's less than half the high of those historic highs. So if that prominent CEO that runs that silver company, I'm sure everybody knows who it is, if we could, he's a pretty sharp guy, if we can embrace that 5 times the price level of silver, 5 times 20 is 100, okay? Just think what these silver miners are going to do. Now, I'm not licensed to talk about equities, but I'm licensed to talk about, the commodities, the futures. 5 times anything in anybody's lifetime is a big deal. Okay, so silver's, it closed Friday, went off the board at 5 o'clock at 1844. Well, 5 times that's $100, triple digit silver. So uranium, that's kind of where I'm coming from the value background. I don't know if gold can do 5 times 2,000, meaning $10,000 gold. But if we have $10,000 gold, we're going to have more than $100 silver.
I'd like to chime in there if you guys don't mind.
Yeah, buddy.
So when it comes to gold and silver markets, if you're going to compare it to something like uranium, the reason why I like uranium and I'm in this trade first and foremost is because there's no futures market for the bullion banks to suppress it. Full stop. Number one. Like for silver, you can go from $20 to $100, but you got to get them on your team to take you there. And with the uranium market, it's opaque and it's just not centralized. But it's when panic hits, it'll go, and there's not somebody else stepping on the price with paper contracts. It's all physical. So that's the only reason I like uranium over gold and silver, especially for a first mover. But at the end, I mean, you can only manipulate something for so long, whether it's in the gold market or the silver market, and it does break. But I just like the cleanness of what uranium has to offer on that side. And, who knows what the ceiling's going to be given what's going on in the market right now.
I don't think, though, Eric, that there's 5 times 5x potential in uranium. If uranium's, is it $60 now a pound? I'm not quite sure what it is.
It's 53,
All
But
right,
if you
so
play the ratio game like some of these guys do, they make an argument for uranium north of $250, $300, and even much higher.
okay, there's your 5 times then. That's good. The only thing,
Yeah.
uranium was 14 or 15 and now it's 50. So it's gone up 3 times already. Silver was 50 and it's 1890, 1870, something like that. I'm just saying that today's price, if you look at the price levels, I watched the futures markets daily. That's my profession. Silver's cheap and it's got room to run. And I agree with you that it has been held back. It's been manipulated down. It's that's my opinion as well. To go along with other people, but I think one caution that I might have for you is that the bullion banks, when you say that they're selling, that's the second tier of their two-tiered business model. They buy the silver from the mines. They've got a contract to buy the silver from the mines, and then to relieve themselves of the silver, they short the silver and deliver the silver on the futures market. So when they buy it from the mines, they're actually long the silver, and they're long the silver temporarily until they offset it to a speculator or an industrial company or to a fund or something like that. So be a little careful when you say that the bullion banks are shorting the market to manipulate or hold the price down. They're shorting the market to deliver the silver that they are long. They're long the physical silver, the bullion bank I'm talking
Yeah,
about.
yeah,
Now,
yeah. For their customers that bank with them, whoever that might be.
yes, but they
Yeah.
do have a speculative component to their desk, and they've been short the physical to deliver, and they have also been short. I agree with you. They have been short in the past and made a lot of money on their shorts.
Oh yeah, I paid the price in the options market for that a few times till I wised up to it. But what was I going to say? Just slipped my mind. Forget about it. You guys keep going.
I think what I'm interested in is I'm kind of like I'm looking out at the horses, and there are some good looking horses out there, and there's gold, there's silver, and there's platinum, there's palladium, and I'd be any information we have on palladium, I'd be curious to hear about that also. But what I'm, and I appreciate the talk about fundamentals and valuation and that sort of thing. But I think what I'm most interested in is, and this is kind of, I think the deepest lesson I learned from observing the uranium market is that the to my mind, the best returns were already had. Maybe it goes up from here, blah 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 blah, right? But to get back just to say the high watermark of September, October, November of 2021. Let's say that you were long from early 2019, like when I first found that market. I won't say I played it the entire time because I missed a good chunk of it. But the reality is that if you were long from that point, or even some earlier point, and you sold at somewhere in that 3-month window, when it kind of pinged along at that kind of that high plateau, the 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 issues that did the best were the ones that were the that people herded themselves into, and were kind of like self-crowded, and I dare say the meme investing piece of it. And I think in I probably had a judgment against that kind of thing, thinking that um the valuation piece, the relative valuation, the relative value in these things, and the fundamentals of it all would somehow be the prevailing uh decision, that would determine who won the race. But the reality is that to the extent that the race was run by November of 2021, Encore Energy, for example, just had, potentially, like you could say, it had like a good 40x. And honestly, I think that if you got 40x out of something, from I owned that stock at one point when it was 15 cents and it went up to basically $2. If that's not good enough for you, I'm not really sure what might be. But at least to kind of start taking some money off the table. But I realized that that was an issue that people they self herded into, and it created an incredible movement that whether or not Encore like kicks Cameco's ass 6 ways to Sunday and becomes the biggest uranium producer on Earth somehow in the future. The reality is that the movement in that stock, if we're here to make money, like blew away like by a country mile most of everything else. So to that extent, I'm interested in gauging the different horses for that, primarily for that, and it may be between what Austin is saying and Liberty is saying, and and Jim's also that the silver is kind of the way I'm leaning.
Well, the power of numbers is such that something that's lower priced can double easier. $5, if something's $5, 100% return is $10. It's not that big a deal versus gold. If it's $2,000, 100% return means $4,000. So by virtue of silver being at $19, under $19, it can double. It has doubled in the past, to go over $35 or $40 a couple of times. So just that way, if you can look uranium at a producer of silver, and there's different miners that are out there that, let's say they're $5 with silver at 19, let's just call it 20, silver's at 20. If that silver price goes to 30, those producers right now that are making $1 an ounce, suddenly they're making $9 or $10 or $11 an ounce. Their equities really soar. So by virtue of silver being at $19 an ounce, the percentage returns are probably going to be higher.
Cassandra, Aurelius, what's up, buddy? Hello, fellow fishermen. Come on up. What you got?
What's going on? What's going on? My question is for Jim. I just wanted to see if he didn't mind explaining. I don't know if you were talking about the miners or the bullion banks being long the physical silver and being short the paper market. If you could explain that one more time, I'd greatly appreciate it.
Yes, sir, I can. Okay, let's say that I own a bullion bank and you own a silver mine. And let's say that the name of my bullion bank is Jim's Bank, okay? And the name of your mine is AAA Silver, okay? You, by definition, you dig silver out of the ground, you process it, and you make ingots of silver. And let's say you make 5,000 ounces a week, okay? Well, you need working capital to pay your electric bill, to pay your workers, to pay your accountant, to make a profit for you to take home every day. So you make a deal with Jim's Bank to sell your silver, and your silver that you dig out of the ground, let's say it's 80% pure, okay? So you sell your silver at, let's say, 80% of the spot market to Jim's Bank. Jim's Bank pools your silver with 5 other guys that own Silver Mine Silver. And let's say Jim Silver does 50,000 ounces a week. Okay, I take in 50,000 ounces a week at 80% of spot. I pay you the money for your 1,000 or 10,000 ounces a week or whatever you're doing, and it doesn't matter. You're not held to it. You and I have a contract, so I'm your buyer of your physical silver, and I buy your physical silver for cash. Okay. Now my bank is long the physical metal. I bought it from you. So the term is you needed to sell the physical silver for money to run your business, to run your mine. And I, as a bank, need to buy. I have a contract with you and with other mines to buy that physical silver. So I buy it, and then I send it to a refiner, and a refiner makes it 0.999% pure. That's what the trade at the COMEX designates. That's what the specification needs to be. They need to be in 1,000-ounce bars, 0.999 silver, and when the refiner gets done refining them, they deliver them to a warehouse, a COMEX approved warehouse that I own the bars. And for every 5 bars I own, I can sell 1 silver contract and deliver that silver to either a fund or an electric car company, or your uncle might be buying silver because he thinks it's a good investment. All right. So here, once again, it's a 2-tiered market. The first tier of my bullion bank is to exchange cash to you, to your mine.
Yeah, I got you. I got what you're saying. So the bullion banks, could you define that? The bullion banks, they're just kind of the handlers distributing to the open market, the paper market, people that are buying in the paper market, and to also people that are buying, just like individuals themselves will buy from bullion banks directly.
The bullion bank probably doesn't deal with a phone call over the counter with an individual or a company. What they do is they supply cash, so they outlay cash to you for silver.
Right, gotcha.
And then they'll just go on the futures exchange. They bought it. Let's say they bought it from you for $20.
Right. Yeah, I got all that. So what's the deal with the 5-to-1 thing? Is I don't understand how could they ever get rid of? So they always have 5 times the amount of inventory than what they really need in terms of.
No, sir. No, it doesn't matter. It doesn't matter what they have. What they have is their 2-tiered market is cash for silver and then silver for cash. Okay, and the futures market is typically, with the movement, they're probably delivering silver now in the September contract that they may have sold 4 or 5 months ago for $26. Okay.
Oh, you made the comment that you have to have 5 bars of silver for every 1 contract that they sell.
Well, the COMEX contract, sir, is a 5,000-ounce contract.
So, that's right. Okay, but they have 1,000 ounces.
That 5,000 ounces is 5 1,000-ounce bars. You delivered silver to me, but it wasn't COMEX worthy, if you will. It was only 80% silver.
I got you. All right, just my last question, if you don't mind.
Sure.
I was listening to some other guys talking about gold and silver, and they were saying that the cost of production is right around exactly what the spot price is right now. So if that is true, and maybe you could tell me if that's true, we should be at a bottom, right?
Well, that's a good point that you bring up, in that in simple basic economics, your role in life for your company, for your mine that you have, is to maximize profits or minimize losses. All right. And both of those are true. Okay. So if, let's say, you're digging silver out of the ground and it costs you $18 an ounce, you're what they call it all in sustaining costs. Okay. Your costs for overhead, for financing, for profit, for payroll, all that. Let's say it's $18 an ounce. If you're breaking even at $18 an ounce, that probably is minimizing your loss rather than shutting the thing down and paying unemployment to employers, electricity. You know what I'm saying? Your general expenses. So the mines are, let's say they're making 50 cents or $1 an ounce at $18. Okay. But it's coming in. But maybe they were, the silver that you sold to my bank, to Jim's bank, was last month or the month before or so. And maybe you sold it at $20 or $21. You were still making $2. But so once you sell it to me for the cash, your trade is done with my bank, but my bank has to offload the silver to get their cash, to get their profit back, to make their payroll, to make their profit. So that's the 2-tiered market I was talking about for a bullion bank. And I'll help you if you have another question.
No, that's great. Thank you.
If I could add maybe one thing on that, like how silver is kind of weird. It's going to sound bearish at first, but I think long term it's a good thing, right? So it really is a weird commodity in the sense that 73% of this stuff is a byproduct. So zinc, copper, gold, etc. which basically means that the cure for low prices is not low prices, and the cure for high prices is not high prices. So like, I would actually argue that silver can go way, way below its average cost of production, because that average cost of production is a stat around primary silver miners who are a minority of the market, right? So I think silver is one of the few commodities that can go way below its average cost of production and stay there for a while, which is why you got to be careful. I think in silver miners, you have to look at these, like, you have to look at their balance sheets. You have to understand their costs, their cash positions, their debt, their hedges, because like in silver, if we're all wrong and silver stays at $17 for a few more years, some of these silver miners are going to go bankrupt, and the ones that don't are going to have some balance sheet issues. But to be more optimistic on that, and to clarify, there are low cost producers who will do just fine, right? The upside of that also means if silver starts ripping to 50, unless everybody just starts turning in their bullion to be melted down, right? The cure for high prices is not high prices. The ability for demand to scale up is very, very limited. It's not going to flex like it would in copper and oil or even uranium for that matter, right? Because zinc miners, they don't give a crap about silver, right? They just want to get rid of the stuff. The advantage we have right now is this energy crisis has created a really weird situation where a lot of zinc is coming offline, which a lot of that secondary demand is coming offline. So that's why I'm cautiously optimistic that we're very close to a bottom. But generally, I would actually disagree that the average cost of production means it has to stop going down.
I would agree with Austin on one point, and that is that the popularity of silver will be much greater at $30 or $35 than it is at $19 or $18. It's kind of like, everybody likes, if you remember the Kmart store, they used to advertise blue light specials if you were shopping there. Well, silver's on a blue light or even a red light special right now, but the investment community doesn't care. The big institutions aren't buying metal. But if silver starts taking out $33, $35, $37, it's my opinion, as a futures guy, that there will be a lot more excitement about it. And this room might have, 50% or 80% more people participating in it at $35 or $38 silver than at 18.
We were first.
Hey, do any of you guys invest in any kind of like technology deals within the gold and silver space?
No, the best answer I could give you is something I was looking at was TMC Metals. That was Frank Justra's play there, where he was, when you go to the driving range and you hit your golf balls and the golf cart comes and scoops them up, right? So it was that for nodules on the bottom of the seafloor. And it wasn't necessarily gold and silver. There's a lot of rare earth type zinc, cobalt nodules down there, and he sucks them up with it. And it was an interesting new approach to mining, and it was promoted as being ESG friendly, and it's much more energy efficient, and especially because everything's laying right there on the surface of the ocean floor that you just literally scoop it up, you suck it up. And you're kind of one and done with it. So that was an interesting play for me. Obviously Frank Juster is really big in the gold space, but that's about the closest thing I can think.
There is a technology company if this meets your definition, a Canadian-based company that they have developed an alternative to cyanide to leach silver and platinum and tin and copper out of electronic waste. The only thing is that their company shares have been just going lower and lower and lower. And from what I understand, it is because the price of containers to ship electronic waste from the big using company or countries to get it to Canada for them to process has maybe gone from $3,000 or $5,000 per container to over $20,000 per container. And part of that might be because oil went up so much, for the containers to go on the ships for transatlantic, ocean freight. But that company, I have shares in it. I'll tell you that. I bought shares in it all the way down so far. And the name of the company or the symbol is EVLLF. It used to be Envirometal. And one interesting thing is the founder of the company just hired a new chief executive officer that may have a little bit more ability to promote the company. But that's an interesting technology company, if that meets your definition, that they can put
you don't know how close we are. I'm on the other side of that. I did a private placement within Group 11.
Okay. All right.
And so I was kind of wanting to find out what you guys thought about that, if you're knowledgeable about what Group 11 does.
Well, Group 11, I believe that they're going to use that same fluid to do what's called in situ mining, if that's the one you're talking about.
That is the one.
Is that the Bill Sharif one?
They drill holes in the ground, and then they put the solution in. It dissolves the gold in the ground, and then they pump the solution out. They redeem the gold from the solution, and then they reuse the solution. And the solution is environmentally friendly. It's almost inert, so they say they can get permits, drilling permits, just about any place. They say it's almost safe enough to drink, the solution, and it doesn't get used up. So
they did a demo with it by putting goldfish in a bowl with the solution, and the fish were swimming around in it.
Right. So that's, I guess, I hope that meets the definition of the technology company you were talking about. I think they have a very bright future, but they've kind of stumbled, and they've not really got going yet.
Well, on the environmental side, it's you hit the nail on the head on the issue there. I think Group 11's a little bit different. They've done the core sampling, and they've got I'm searching for the word and I can't think of it right now. Like a better reaction than using cyanide, where it leaches faster and at higher percentage rates.
The percentage rate is over 90% effective. It's 90 to 96% effective, and it doesn't pollute, and it doesn't get used up. They might have to, if they put, let's say, 1,000 gallons in or 100 gallons in, maybe they only get 90 gallons out. So they got to add 10 gallons for the next series of holes. But it's in situ mining, and I think it's got a bright future.
Well, one of the reasons I like it, and there's a couple companies that are actually related to this, is the business opportunity. So you can go into places like California or Montana and go mine, potentially, where they would never let you use anything, it was caustic as cyanide in the ground. You could, hit markets you couldn't go into before, and the dirt would be cheap because no one else could do it. You can, with in situ mining, you could take very low ore grades, where we're talking, 1.5, 1 gram or less per ton, and make it very economical to extract. And there's some big fields out there that are very low ore grade, but they could be millions of ounces of gold. And so I think it's attractive from a business standpoint. And I played it directly with Group 11, as also with a little tiny company called GFG Resources up there in the Timmins area, where they if Group 11 executes the way they're supposed to, then GFG has a 10% equity ownership within this. And one of the things I liked about GFG was they might have a $15 million market cap. If Group 11 turns out to be a winner, their position in Group 11 might be worth $100 million without them doing anything else.
And folks, the symbol is EVLLF for Envirometal. And if I told you can buy more than 10 shares for $1, you might get excited about it. And that's basically where it is. I think it's about 8 cents or 7.5 cents a share right now. And it came out to the market, I think, at about $1 or so.
Yeah, and Envirometal owns 34% of Group 11.
Yeah. So it's worth taking a shot if people are interested. And David Morgan, I believe, is a director of the company. I don't want to speak for him, but I believe that's true. And
it is true. He's
also a big promoter of the company, although I think because of the recent downturn in the share price, I don't believe he's been mentioning it very often. But I think it's a wild card for several $100s, you can have a lot of shares.
Well, also, they own that piece of Group 11, and Group 11's team is really the Encore team that runs it. and they've got this solution that works. It's two things that have been proven to work. They're just marrying the two. So I think it's got a high upside of actually being realized. And where Group 11 is now is they've done their initial core testing. Now they're actually going to go poke a big fat hole in the ground and pump the solution down in one hole and suck it back up from the same hole as the recovery to do an inexpensive proof of ISR.
They might have, Eric, they might have thought it was too good to be true, but their testing proved that the solution does work.
Yeah.
And 90, it's like 93 or 96%. It gets that much of the gold out of the sample.
Yeah, well, it depends on the rock, right? So if you're just doing it in like a concentrate, you're absolutely right. If you're talking about in a core sample, it depends if the rock is oxidative or not, and how oxidative is it. If you've just got some, regular cores, you're not going to get those kind of recovery rates whatsoever. But if it's oxidative rock, it's still performing better than cyanide does, and it does it quicker.
There you go, everybody in the room. That's the tip for tonight that could pay a nice dividend.
All right. Liberty, are you ready for the section of the segment where I attempt to shill you on a mining stock and you give it a pass or fail?
Yeah, let's do it, brother. Let's go.
I think it'll be an ongoing segment, perhaps. I'll try to shill Liberty, and we'll see if he buys it or not. All right, so something I've been looking at a lot recently, and all of a sudden it became my biggest holding, and that's more than Wheaton, and I love myself some streamers on this one. So Silvercrest Metals, it's in Mexico. It's a really strong exploration story that they're going into production in Q4 of this year. It's a really, really low-cost mine. So basically their AIAC is about 6.6. And with their free cash flow projections from the feasibility study they ran, at their base case, $19, which I think is pretty fair when you think about 2013. It's a 5.4 times free cash flow, which is an 18% free cash flow yield. Like that's some like oil and gas stuff right there at a very, very reasonable silver price. And this is also a company that has a net cash position. They'll probably need the rest of it to get into operations, but I don't think they'll have to raise money or issue shares to continue to go into operations, because as of right now, they're actually running under budget. And under budget for a mining company, that never happens. Their upside case, just $27 for 2013. That's going to put them at a 3.9 times free cash flow yield. And of course, like I always like to be optimistic. Let's say we hit those. Let's say we hit those all-time highs. I would never base an investing case on this, but that's a 2.1 times free cash flow ratio, which is a free cash flow yield of 50. So on this one, it's really the timing that I love on this one. If you guys are Lord of the Rings fans, you know when Gandalf the Grey, quote unquote, dies, comes back as Gandalf the White, he's like, hey, I'm coming to you guys at the turning of the tide. I feel like this is it. Typically, these discovery and exploration stocks tend to get re-rated as they get close to production because a new type of investor comes, right? People that are interested in really just investing instead of speculating, things where you can have a feasibility study on it, model the free cash flow out. It's used to bring in a new type of investor. And I think because this market has been such a massacre and people are just trying to stay away from silver, people are disgusted with their silver portfolio. They don't even want to think about it. This thing's flying under the radar. Like this part is getting out of my circle of competence. I'm more of just like kind of like a financial like type guy, but a lot of like Rick Rule raves about this thing. A lot of other analysts in the industry are raving about this thing. They seem confident they're going to find a heck of a lot more silver than that, and they've only actually went into I think 15 of the 45 known veins on that property. And Sprott owns 9% of the company. You have a lot of stability in there. I think it was because they did a lot of the initial financing. They held on to these shares, own 9% of the company. And the last thing, getting a little long-winded on this one, the last thing is just like the ETFs. And this is kind of the thing that is like, I would never base an investment decision on this, but it swayed me to actually put a little more into this than I typically would. So SILJ is what I would call the biggest silver ETF for the stocks that people like us are probably thinking about. SIL is the biggest silver index that has like a lot of stocks. It has like almost like secondary demand. It's just like I don't know. It's not really like a primary high upside producer. They do like they do their allocations and weightings a little bit weird. It's not necessarily, and I need to like email investor relations and see if they'll tell me on this. I can't quite figure it out doing it myself, but they have about 600 million in assets right now. When silver was back at $27 and there's high interest, it was something like 1.1 billion. And I think in a market that has like primary silver miners, 40 billion, something like that. It's not a trivial amount of money, right? They don't use market cap weighting, but they basically weight like primary silver heavy companies to be more. So listen to these weightings and market caps, and I don't know, this surprised the heck out of me when I actually looked into this. First Majestic, also love this company. 14.5% of this index, a market cap of 2.11 billion, and they have 50% silver, basically 50% gold. Pan American, much bigger company, $3.3 billion market cap. They're 5% of this index, but they're only 26% silver. Silvercrest right now, $870 million market cap. They're about 3.9% of this index because they're about 53% silver. If this thing starts getting interest, that weighting very theoretically could catch up to First Majestic and exceed Pan American in a hurry because of their very high weighting towards silver. And if anybody's not familiar with it, just because silver is so rare and it's so hard to find, it's actually rare to have even a silver company that's more than 50% silver. Most of the quote unquote silver companies have an actual like silver ounces that are lower than 50% of the revenue. So I think once this thing gets re-rated, as people get interest in this thing and kind of just like catch on to this narrative that I think is really flown under the radar, I think the weighting in these ETFs is going to skyrocket just because of the weird way that they do their weightings and allocations.
That was some really good stuff there, man. Thank you for sharing all that. Man, that was solid. So, looking at the chart here, I was looking at it while you were talking about it. So Silvercrest here, it's actually been outperforming the sector. It actually looks really, really good. So I think that's indicative of something big too. So we're going to have to take another look at that one. But the chart looks quite excellent, actually, especially when you zoom out. Just for another state of reference here, the breadth is the second most oversold it's ever been. So again, it's just one more element showing confluence within the sector, and it's getting a nice balance on what could be a potential double bottom right here at $5. It looks pretty good. Looks real good. Thank you, Austin, for that.
Okay, shilling number one of this segment, I think, is a success. Liberty buys it.
Liberty buys it.
Alex buys it too. Why not? What's their mascot also?
I don't think that they have one. I'm going to write into investor relations. If you want to brainstorm on that, let's do it. Get something like Kraken level. I think that's what they need to go to the next level.
Krusty the Cat? I don't know. I think that'd be good.
I like it.
Yeah, Alex has all the best picks, and his strategy seems to work. So don't take it lightly, guys. He's on a roll with this stuff lately. By the way, anybody who's not up, feel free to come up. You're welcome to join in the conversation, whether it's a question, you want to bring up a new subject, change the subject, maybe you saw something in the news, whatever it might be, you want to talk about it, hear some insights on it, feel free to come on up and join the conversation.
I was kind of curious, too. I don't know if you guys saw that they had a premium on coins with Queen Elizabeth on them. So they said they were selling for $1 more extra. So I don't know if anyone else saw that or had any thoughts on that.
I did not see that. I got a question for Jim since we're talking about coins and we were talking about purity earlier. So as you likely know, the typical gold eagle has a purity of, I think, 0.92, 0.921, something like that.
No, sir.
No?
The American Silver Eagle is 0.999, and
No.
the one that I'm aware of that's 4 nines is the Canadian Maple Leaf.
If I misspoke, sorry. I was talking about gold. I think the gold eagle is 0.92, 0.9176 or something like that. It's an odd number. 917, actually, I think it is.
Okay, I'm not aware of that.
Well, I was just looking to see if you had any opinions on the more fine gold with the quad nines, versus the typical eagle that's 9.2.
I do have an opinion, and that is, I guess, from a value point again. If you just look at dollars and cents, I listened to a gentleman that's connected with a great big online silver and gold retailer. They're online and they're big. And he was online with the Wall Street Silver folks this weekend, or yesterday, or the day before. And his opinion was, and he would know, that the junk silver, the 90% silver, constitutional silver, he says is $8 over spot. All right. Well, if you look at one, that's a 1964 quarter or a $half or dime, that kind of thing. They're worn. Okay. They're used silver. All right. And you can buy bullion coins. They call them BU, brilliant uncirculated coins, that are brand new, haven't been touched by human hands. 999, 0.999% silver, and you can buy coins, rounds, bars, that kind of thing for well under $8 over spot. So in answer to your question, Liberty, I would buy the higher refined, the higher percentage silver or gold in every case. If you were contrasting that with bags of 1964 quarters or dimes or $half, only because it's more silver per ounce. So, and if you can buy it under the $8 per spot that this gentleman referenced, they used to be, $2 over spot, and in different times they were at spot. Well, I just think that, the people should make a decision. You can buy what you like. Everybody can buy what they like. And some people might prefer it because, well, they can trade it for groceries in tough times or something like that. But I would rather buy the purest form I can for the least premium that I can. That's my opinion.
Yep, I'm with you there. And I'm on JM Bullion right now, just for reference. If anyone hasn't bought physical in a while, you can get Buffaloes for $24. That's the lowest it's been in a while. And of course, you're looking at Canadian Maple Leafs for $26.50. So those are encouraging. So if you're looking to add, I know some people had reached out to me about buying physical silver. Now might be a pretty darn good time to start accumulating, at least get your feet wet. These prices have come down $4 or $5 over the last several weeks. And again, if you're kind of just tuning in, as we alluded to earlier, we are likely kind of rounding out here. For me, the silver spot price is very hard to predict. I tend to get it wrong on a regular basis. Equities, much more on point, but the spot price kind of does whatever it wants, and it's hard to track. But, like Jim has been alluding to the entire time here, any downside is asymmetric to the upside. So you guys should feel encouraged, I think, in my opinion, to get yourself exposed to some precious metals now while the prices are down and the premiums have come down a little bit relative to recent history. It's a good opportunity to kind of get in here. Go ahead, Austin. What's up?
I was going to ask Alex what he bought. I noticed on Twitter he said he was getting ready for a big buy.
I did
Yamana.
Trigger. I mentioned it earlier.
Oh, gotcha.
Hey, I have a quick question for you guys. It's been burning a hole in my head for a couple weeks. With fiat starting to get crazy as you're seeing global currencies move around all over the place, which countries are most likely to nationalize their gold and silver mines so I can stay away from them?
Yeah, that's a good question. That's a legitimate question. And I've been wondering the same thing. Things don't look good in Chile. I can tell you that much. Things don't look too good down there at all. I'm not sure there's a threat of nationalization, but they're definitely stopping production. They're stopping things from coming online. So that's a red flag. There are some extremely good companies down there, like Rio 2 is an excellent resource that's, sold off 90% now, and it was on the cusp of getting permitting. So, you know what? I think about that sometimes. And, I don't have the answer, but you encourage me to go find that answer and start reaching out and getting that answer too, because it's a great question. And I don't think that it's something to skip over. I think you're on target with that. It's a real possibility for sure.
That's a great case to own some of the royalty and streamers, though, right? They're so diversified across all countries, and not all countries, many mines, many companies, right? Like, if a segment of countries start nationalizing mines, the one that don't, the price of silver and gold is going to go parabolic. So if you have some physical and you have some Franco-Nevada and Wheaton, I would look at that as almost a hedge.
Yeah. And Rick Rule hosted an interview recently with Sandeep from Osisko Royalties. And it's a company that we actually fail to mention sometimes. It gets skipped over, but it was a really great interview there. I think it's worth checking out. They talked about a lot of their margins. It's a really great story there. I personally like all of the Osisko plays. There's Osisko Royalties, Osisko Development. There's just the Osisko Mine. And Osisko had some problems. Sprott actually bailed out on them. We don't really know what happened. This is something I brought up with Don Durrett, and we kind of hashed it out. He thought that in the long term it's going to be okay, but it's a very bad look to have Sprott bail on you, especially at the stage that they were at. So we really don't know what happened. If the resource wasn't accurate or if it looked like it was going to come up short, we don't know. But Don seemed to think it was worth nibbling on down here in the basement. But there were 3 companies with the Osisko ticker, and I own them all.
And Liberty, your biggest holding is the Eagle, right? Agnico Eagle.
No, but it's probably about to be. In all honesty, I was really hoping to come down and retest at lower level, but the way the charts are going, I don't know if we get that opportunity. I'm happy to add. I don't have to min-max this stuff. We're in accumulation zone here, and so if we start rolling up on some momentum, I'll just go ahead and add in and catch here. But I made 2 purchases. Yeah, I made 2 purchases. I think we got in at about $48, and it fell down to that lower trend about 38. I think I added again at 40, and so I'm up a couple of percent right now on it or something, or break even right now. Yeah, I was hoping to add more a little bit lower.
Were you a shareholder of Kirkland Lake or Agnico before the merger?
No, I wasn't.
I was just kind of curious how you got into it initially.
How I got into Agnico?
Yeah, I mean, sometimes, like, I had Kirkland Lake back in the day, and, I could have held and then been a part of the Agnico. It's like, I always wanted to find out if they've been a long-term shareholder of the stock or if it's a newer entry.
I got you. Well, for me personally, the name kept coming up. I do purchase newsletters and I watch all the interviews from all the legends, the Rick Rule types, and it was always positive, very positive, very positive. And then you go start digging into the company, and their financials are good. They have a dividend. They've increased it and have held it for 33 years. They have an excellent structure. They keep expanding. They're very good allocators of their resources. It's a really good management team over there. There's a lot of success. It's a lot of history. I like being able to pull up the chart and go back as far as I can. Pretty much any way you look at it, from a fundamentals perspective, from a technicals perspective, all the right people, all the right advice, some of my favorite opinions. Everyone's bullish on it, and I can't find anything wrong with it. So it's now become my go-to select down here in the gutter for getting exposure to big-name top producers.
I agree with that. Agnico Eagle is far and away my favorite gold miner. Like, it's not even close, right? Like your other just like majors. Like, I think Barrick's solid. Like, I guess that they're a low cost producer. The problem is they don't really have a great growth profile, in my opinion. But Agnico's kind of got it all. They have a great portfolio for growth. They're really low cost producer. And then kind of maybe going back to Uranium Cranium's question just a little bit, that I think what people miss is like, yeah, gold's gone down to 1,700 and some change, but like Agnico Eagle has an AIC of under 1,200. I think it's 1,150 or something like that. They're making money hand over fist in this like quote unquote gold bear market, right? Like these companies are just they've cleaned up their acts, similar to how just like the shale companies had to clean up their acts to survive, and they came out of this when oil prices went higher, making money hand over fist. Like a lot of these companies have cleaned up their act. Agnico is one of them. Low cost producer, great growth profile. I can't find anything wrong with it either. I love it.
Yeah, it's a massive asset. I listened to their earnings call. I actually think now they did admit that this is probably going to go up, but well, I guess it is 1150. But they had mentioned in the call. I'm looking at the chart right here. It says 1150, but in the call they had mentioned 1,025. So I'll have to go check back on that. But annual production, 3.5 million ounces. You could get 4.5 million ounces over the coming years. They continue to expand their assets. They still have holes that they're drilling. They're expanding. Again, there's nothing wrong with it. And so when you find something like that at the bottom of the barrel, it seems good to me.
On the other side, what's your guys' favorite microcaps? We'll say 25 million and under for gold and silver.
Ooh, I don't know if I can give you a 25 milli, but I can give you some that are pretty low, around 100.
Sure.
So I've talked about it a few times. Minera Alamos. This is another project in Mexico. They have 2 mines. One of them is already up. The second one is already permitted. So they really don't have anything standing in their way. They're already in production. Bare minimum, they're looking at a target of 100,000 ounces a year. This is a 10-year mine life. I think within the next 3 to 4 years, they're projected to get up to 250,000 ounces per year. And so that's quite significant. That's a lot of ounces for a company. Let me pull it up. Where's my Minera? So I'm looking at the over-the-counter here in U.S. And so this is 171 million, okay? And it's down now. It's down 40% from the highs. It's been performing pretty well on the charts, holding up some key resistance or support there. But it's relatively safe jurisdiction. It's close to home. It's already financed. You don't have to worry about dilution. It's a great project. They still are looking to find more, right? So there's still more reserves that we can get to, right? And I don't see anything wrong with it. I think it's an easy 10-bagger, right? It's my favorite one to recommend to people looking for a high upside play. And if you start approaching $2,500, $3,000 gold as they're coming up to, 250,000 ounces, you could 20-bag this thing, right? And so near-term upside 10, as high as 20, I like it a lot. And again, those Osisko names that I named, with the exception of the royalty company, it's already really big, but those others are some pretty good projects too. Go check those out.
Can I ask about a company?
Let's do it.
Nevada King.
Nevada King. I haven't heard of it, but I can dig it up right here.
You heard of Newfound?
I've never heard of that one.
You've heard of Newfound?
Yeah.
The guy that started Nevada King.
Okay. Yeah, Newfound was a big one. Once it broke $3, it skyrocketed. So here's what I've got on it. We have a market cap of 91 million, 0 debt, 13 million in cash. Let's see. Can't see what their resources are, but they've got 4 projects, all 4 in Nevada, about 5,000 hectares each. Let's see. I don't see too much info. I'll have to dig into it. I don't know about that one. Not really any info to provide. Sorry.
Yeah, there's a guy named Colin. I forget what his last name is. Tottrell or something like that.
Is it Cattell? Colin Cattell?
Yes.
He does Palisades Radio. Like he's not on there as much anymore, but he's like one of the co-founders of them.
Right. So he got Newfound up and running, as an explorer, and they're up close to a billion There may be 800 million. And Nevada King, which I think the gist of the company is that they have some massive number of claim stakes. So if this is a marketing, the marketing angle for them is that, and it's the same guy, Colin, and it's now he's the CEO of what is an $80 million company. The marketing differentiation is that they have, and they do have a past producing mine. I think that they did some drilling on whatever called the Atlanta mine that I don't know. I don't really know all the details of that. They're obviously excited about it, but they also, I guess, actually staked a bunch of stuff all throughout the Battle Mountain Trend, like all the way up to essentially from just north of Vegas all the way up to I-80. So that one just has my interest just because it's the same guy, and I think it would be kind of depressing to go from newfound gold to shit. And so there must be something decent that if he's sinking in there and hanging out for the long term.
There's one microcap, I guess I'd call it that I really like. It's First Mining Gold. They're kind of a land bank. They've got several projects that they own, and they're partnering, I believe, with on either 2 or 3, I believe it is, of their current projects right now to get them up producing. But they're basically a holder of resources in the ground, and their share prices come down as well, like everything else. But Keith Neumeyer's involved in that. He's the head honcho, and Dan Wilton seems to be a very experienced chief executive officer. And they do videos. You might find them on YouTube or something like that. I think that they've got a bright future, but it's probably more like a 3-year play rather than a 6-month or a 1-year play.
So how do they plan? Like, what's the business strategy there? Is it just hold on to the land and flip the land to other people? They're going to start exploration on some of that stuff later?
I asked Don Durrett that question. He thought that was a great question. Some of them, no names needed. You can check back when he comes back. We can ask him again. But he kind of said the point that some of them are just buying old things and saying, "Look what we got. Look what we have." So it's a new business model. It's not something you've really seen, or you don't. I don't think I see it in other resources, but that's kind of the model right now. Is step 1, buy stuff. Step 2, look back at step 1 so far.
They're not making any more land, so there you go, right?
If anybody has any other micros that they're sharing, I think that would be cool to continue that. I would ask if we could at some point just backtrack to Austin and ask for, just what kind of prospects Silvercrest has financially under different scenarios. I don't think we really covered the prospects of it, upsides kind of things. So maybe however you guys want to do it, but if we could at some point just circle back to that, would be cool.
Yeah, I can talk about I can talk about how I'm thinking about this. All right. So, I mean, I'm trying to not overcomplicate it and just make just 5-year, 10-year plans. I'm kind of just looking at these 2023 free cash flow yields, and just looking at a couple different scenarios in silver, looking at the mine life, which is 8.5, 9 years. So the company it's towards their base case of $19 silver is going to make 5.4 times free cash flow to their market cap with no net debt. If there's no snags and they're able to continue executing and they're going to production in a few months here, so I would assume there's only so much can go wrong in that point. But in mining, you can never be surprised, right? The way I just look at this is, okay, so let's just say that let's say that silver is $27 next year, and the market values that at a 12 times free cash flow yield, which I think is is free cash flow a multiple, which I think is fairly conservative. That would put their market cap at like 2.6, 2.7 billion, which makes it a three bagger next year. If they get a 16 free cash flow ratio on that, that would put them at a four bagger just next year. And I'm not trying to sit here and just like, because it's a very, very bold claim to say anything's going to three or four bag before next year, right? And like, that's what the math says. Like, if the feasibility study is right and they continue to execute on this, and silver goes to $27 per ounce, I think you're looking at a 3 to 4 bagger in something that's very, very low risk, which to me is just like an unheard of value proposition. I personally lean that silver is going higher than $27. What I love about it is this, it doesn't take some moonshot all-time high to make a crap ton of money in this one. You could go and you could take your initial investment out at $27 silver, let the rest ride in this thing, and who knows where the upside is, because I think silver's going higher than $27, but the entire thesis is not predicated on that.
Did they have some sort of event where the locals like got all pissy about stuff? I just recall. Do you recall that any event like that, Austin?
Not to my knowledge, but I'm not 100% confident in that.
All right, then we're going to say that there's no truth to that. Sometimes I remember things, and I'll have to go look, but I just didn't know. I mean, it is Mexico, and that's a good jurisdiction, but I also know that sometimes those dudes down there everybody likes to drive their truck to work one day and block the gate sometimes.
Can I share with the room a little bit about the futures contracts, how they work for people and calculating return on investment? Does anybody have an interest in that?
Absolutely. Would love to hear it.
Go for it.
All right. How futures work, they're government regulated, leverage traded derivative contracts. Okay. And derivative, it just means they're futures contracts for future delivery. So let's take the December contract. That seems to be that's the current popular contract in both gold and silver at the moment. So let's say silver, it went out the other day at $18.44. They trade 23 hours a day. They are off between 5 and 6 o'clock Eastern time. They start trading Sunday night and they stop Friday at 5 o'clock. Otherwise, they trade 23 hours every day of the week. That's the New York COMEX exchange contract. All right. And how the math works for people in the room, if you want to write it down, it's pretty easy. Let's just take simple math. Let's say silver's trading at $18. Okay. Each contract for future delivery is 5,000 ounces. In gold, it's 100 ounces. So in gold, the contract is one 100-ounce bar, and in silver, it's 5 1,000-ounce bars of 0.999% purity. 0.999, yeah, 3 nines. All right. So in silver, the margin to trade one contract, and the margins are subject to change. They're down a little bit here from what they were in the last year and a half. Let's say they're $8,000 to trade a contract. All right. Well, silver, I already told you, it's 5,000 ounces per contract. So if you buy it at $18 and it goes to $20, you made 5,000 ounces times $2. That's 10,000. Okay. That's over 100% return on your $8,000 margin. It's like 120% return. Just for ease of thinking about it, if silver goes up, for every $2 that it goes up from $18, you're making 100%, actually more, but you're making 100% return on your money. All right. So that's how the arithmetic works, or the math works in futures contracts. That's why a lot of these pro folks trade futures contracts, because of the leverage and the liquidity. If you want to buy a silver contract, a December contract, the bid offer spread is a half a cent. Okay. If you called a silver retailer and you said, all right, I want to buy silver eagles today, what price can I buy them from you, and what price will you buy them from me? That spread might be $8 or $7 at the current price. $7 per coin, per ounce. In silver, it's 5,000 ounce contracts at a half a cent spread between the bid and the ask, bid offer. So they're open 23 hours a day. It's because of the leverage, because of the margin to trade each contract. You have to post the margin to trade a contract. Both the buyer and the seller of the contract post margin. And the margin deposit is how the winning side gets paid. And the winning side gets paid from the losing side at the end of every day. After the settlement, it gets settled and transferred. The money gets transferred from the loser to the winner while you're sleeping at night. So that, in essence, is how futures contracts work. So people are talking about 2 baggers, 3 baggers, 4 baggers, 5 baggers. If silver goes to $30, well, how would you like to have a silver futures contract that you doubled your money every $2 it goes up? So I'll answer any questions if anybody has any.
I do have a question on that one. Oh, sorry, Alex. I just saw your hand go up there.
No, it's fine. Go ahead. I hit the wrong button.
So on this one, and maybe everybody grab a drink if you haven't already, because it'll maybe just like this conversation will take a little bit of a twist. But these gold and silver conversations always you end up going. So my fear on that is what you're saying from a mathematical perspective. It makes complete sense to me. Like, it checks out. It definitely works in a spreadsheet. Like, I just look at what happened with the Hunt brothers. I look at what just happened in LME with nickel and the ordeal. I'm just too scared that even if I do all the work, I get it right in the futures contract, things go my way. Like, if it really hits big, like, to really warrant the risk of doing it, like, I kind of just feel like I'm going to get effed in it. Like, I don't know, like the whole nickel deal just like kind of just turned me off from playing in the futures market in any way.
Well, first of all, I want to say that the $2 up in silver, it's the same math. I want to make sure I stipulate this with everybody in the room. It's the same math. If the $2 goes against you, you lose. Okay, so you lose if your $8,000 margin, if it goes down $2 in one day, and you're saying, well, it can't go down $2 in one day. Well, when we had in February of 2020, it went up $3 in like 2 days, and it came down $3 in 2 days. So in 4 days, the shorts were on margin call and the longs were on margin call. And margin call, that just means the futures market went against you enough that your margin dropped below necessary maintenance margin, and you get a call to add more money immediately to your account. All right. We don't need to bring up the Hunts. So you brought it up, but the Hunts kind of got screwed because the futures exchange changed the rules on them. Okay. And I don't think that'll happen again because there's too much clarity now. There's too much awareness, too much news, instantaneous news, that I don't think the COMEX is going to be changing the rules on anybody in the near future. I think that when silver gets back to $50, which it hit in 2011, just under 50, and 1980, just under 50 or $50 against the Hunts, I think that you will see the market go by $50. That's my opinion, significantly. So,
Okay, so you're saying it's very unlikely that the COMEX will do what the LME did?
the LME had a problem with one big hedger in nickel. Okay, and that's hedger in nickel. They changed the rules against the traders in that they nullified a bunch of the trades. Now, I don't have a license for the LME. I don't really know anything about it other than the same thing that you read in the news, but they nullified some trades against winners and losers. They basically canceled the trades to help this one great big hedger that I believe is probably a nickel producer, okay, to save him. And that guy, I think that I don't know, remember the name of the company, but I think the margin call was like a couple $1 billion, something like that. And I believe he did pay it, but they did change the rules in that they nullified some trades that, in my opinion, is a no-no. You don't do that. You took money away from the winners and you took money away from the losers by canceling trades. I believe it was on one afternoon trade.
Got it. What's everybody else think about this futures market? Are you guys like if you like understand it's like the math of what he said, are you guys like
It seems like
doing
you
that,
can't
or?
buy it and forget it. That's my theory. You can't forget about it for a few weeks.
Alex, you're exactly right. If John Smith became my brand new customer on Tuesday morning or Wednesday morning or something like that, my favorite spiel to Mr. Smith is futures involve risk. And if you're going to go on vacation and be out of the country and not be able to be by the phone, let's take off any positions you have on until you're back where you can maintain contact with me, the broker, as your representative, as your agent, because things happen. And this is not futures because of the leverage involved. Futures involve more risk than, fully funding 100 shares of a stock that somebody might buy. That way, if the stock goes broke, you went broke on 100 shares. But futures, you can lose more than what you put in because you're liable for that margin. If that market keeps going against you, it can get painful quickly with that kind of leverage. Like I said, it's $5,000 per dollar. And silver dropped from $30 in the year 2020 it to $17, $13 down. And it was almost $27 in April of this year. It's down $10 from then. But so it can go against you. But if you heard me earlier, I believe that there's maybe $1 downside risk, $5,000 risk downside to make $5 or $7 upside. Well, $5 upside is $25,000 on an $8,000 margin. That's 300%. If we hit $5 profit.
So I have a question for you. Like, that's in a normal functioning market, but what if you have and what I mean by that is we see the LBMA and the COMEX being drained to the physical metal. What's going to be your warning sign not to play futures, because futures could go down to zero and just the physical market takes over?
All right. I will qualify your question with that. In May of last year, the crude oil market traded below zero with 2 days to go in the May contract. They were in delivery, and nobody, the people that were caught in that market, maybe they were online traders or something, they didn't know what they were doing. They shouldn't have been. You shouldn't be in any market that's in delivery period unless you're going to make delivery or take delivery. That's my counsel opinion, my informed opinion on any deliverable market. So I don't think silver's going to zero in answer to your question. I think silver can go $1 lower. If it goes more than $1 lower, I'm likely to be wrong, but don't fault me if it's $1.20. Okay. I guess that if it starts going higher, you can put stop loss orders in that are orders to automatically exit you at the market if that price level hits. And you can what's called a trailing stop loss order. If you bought it at $20 and now it's at $24, you can raise your stop loss to 23 or 23.20 or something like that to protect your profit or protect you from having too big a loss. Now, I need to qualify that, and that is that, let's say you bought it at $20, we're trading $24, and you have a stop loss at $23. Okay, so you've got an order to get out at $3 profit, but if the market opens at $22.50 on Sunday night at 6 o'clock, you're going to get filled at $22.50. So that there's a improbability of that happening because the futures, but stuff happens. I mean, the market at some point, I would think it's going to open $1 or $2 higher someday rather than $1 or $2 lower someday. But what's normal is if you closed Friday at $18, on Sunday evening, you might open at, plus or minus 20 cents or plus or minus 30 cents from the close on Friday in a normal market.
Eric, is your question what happens if general people and market participants lose faith in the paper markets? Though, let's just say that people nobody wants a paper claim on silver. They either want physical or they want something back like the PSLV trust, right?
Yeah,
so necessarily whether
it becomes when the exchange really has very little physical at all, like what's happening now.
Well, Eric, I'll answer your question this way. All right. In the last year, the total amount of silver has come down, okay, that are in COMEX approved warehouses. Now, the total ounces are the sum of eligible silver and registered silver. It's the same exact silver. The only thing is the one category, the registered, means that there is a warrant attached that can be held for delivery. Now, the eligible can become registered at the whim of the person that owns it. All right. But you've been reading, and I've been reading, that all sorts of, not all sorts, but several people on Twitter have been posting the COMEX is being drained. All right. What if I told you that we're at 324 million ounces now, and that a year ago we were at 354 million ounces? All right. Now, 324 million ounces, does that sound like it's being drained? Now, there has been some silver bought and some silver taken out of the warehouses. And my answer to that is, Eric, no wonder. It's the cheapest silver without any premium at all. All right. So if you stand for delivery, if you bought the silver on Friday's close at $18.70, and you've got the wherewithal, you've got the means to take physical delivery on the December contract, which the delivery will start the last business day of November. That's when the delivery period starts. All right. You will get delivered on December silver at the price you contracted at $18.70. All right. It might be $25 by the time that delivery comes out. You might say, if I were your broker, you might call me and say, Jim, what should we do? And I would say, Eric, do you want the physical silver? You said, you bet I want it. I bought it at 1870. I said, all right, let's fully fund your account and stand for delivery. We'll tell the futures commission merchant, the people that I trade through, will tell them you're standing for delivery. Your account is fully funded. And when the short decides to deliver, it's at his option which day during the delivery period. Your cash leaves, your futures contracts get settled on the day after. It's T+2. So the day that the short decides to deliver, T+1, your futures account gets settled. Let's say we're at $25 and you bought it at 1870. You get the difference between 1870 and the $25 credited to your futures account every day. It gets credited between now and, let's say, December 5th. And then T+2, the second day, the cash leaves your account, goes to the short, and the short's silver comes to you in the warehouse where the short is holding the silver. It has to be in a COMEX approved warehouse to make sure that everything is standard and that everything is hunky-dory kosher, if you know what I mean, that everything is within the COMEX rules. So the warrant, the title, basically, it's the same as you selling me your Ford pickup truck. I come and get the Ford pickup truck on Saturday. You give me the title. And on T+2, because the DMV isn't open on Saturday, Monday morning, the title gets transferred to me on the pickup truck. I have delivery of the pickup truck, and the title is the warrant. So now you have the physical silver in the COMEX warehouse because you wanted it. You bought it at 1870 this last Friday, which was yesterday. Your funds transfer to the short, and the short's physical silver transfers to you.
Speaking of physical, how much of your precious metals portfolio is everybody? Maybe like Liberty, Alex, anybody? Like, how much you guys holding? Like, how much is physical? How much is miners or anything else?
I'd say maybe 5% physical, but again, something I kind of learned early on. It's great to have, but it's not liquid. It's really, it's kind of a journey to get. I know this group doesn't want to hear it as much, but it's not as easy to sell as the stock. The stock can just go in and out really quick. So there's the Sprott one you can buy if you just want physical. So that's an option. But not as much. But I do have a decent stack. So,
well, Alex, how would you like to hear that your futures contract of silver, you can sell it 23 hours a day?
So, what's your minimum for clients, right?
Well, I'm not. I didn't come here to solicit clients. I asked the room if anybody would like to hear about the mechanics of how a silvers contract works.
Yeah,
So
we appreciate it. We really do appreciate it.
if
You know, it's
wants
kind
to,
of it's kind of hard to.
if somebody wants to know about, client relations expectations, they can send me a direct message on Twitter. Once again, I'm just here to inform. I'm here to answer questions, help people learn and understand, maybe get the truth from things that, from some false advertising or some false statements that have been said on Twitter about futures. And I've been doing it a long time.
Hey, Jim, I did have a question about that, actually. I was wondering, do you need to be licensed to trade futures, or can just your average Joe go onto his favorite brokerage account and trade futures that way?
Well, Carl, I will say that I'm licensed to trade clients' money, to be a representative or an agent to do that. All right. You're partially correct that you need to have sufficient risk capital, okay, to fund a futures account. But your favorite brokerage company may not have a futures division. Okay. So I want to make sure that I'm clear that futures are completely different than stocks or bonds. Futures are leveraged instruments. It's a different license for me to have than if I had a stock license to be a stockbroker. And I would say that a well-heeled individual or well-heeled Mr. and Mrs. joint account can trade futures if you think that it's in your best interest, and you find out if it's in your best interest by asking questions and getting comfortable with risk and reward, and then the risk versus reward. So in answer to, hopefully I can generalize an answer to your question that say, futures aren't for everybody, because I don't think single mothers that got a bonus at work should ever trade a futures a contract. But I think that if you're 35 or 40 years old, if you're single, if you make six figures a year and you've got $40,000 in the bank that's earning nothing or 1% a year, I think you could probably, if you were interested, I think you could decide to speculate is the right term, to speculate with 10 or 20,000 or 10 or $15,000 of that. Start small, and if you're good at it, if you have success, you could always add to your account. That's how I'd try and answer your question. If you want to ask some additional, let me know.
Okay, great. Yeah, thanks, Jim. Appreciate it.
So, Liberty, I don't know if you want to answer the question from earlier for Austin, then I got one for Jabroni after that.
Yeah, I own more physical than anyone would ever recommend. All right, so that's kind of my answer on that. It's overweight for sure by a lot. Jim, I do have a question for you though. Sorry, Jabroni, hold on one second. I actually want to start with kind of bare bones fundamentals basics. I want to understand the process of taking delivery. So let's start with silver, and then I want to follow up with oil. Maybe you can just go ahead and do that. But if I stood for delivery with silver, is it as simple as providing an address? Are they going to put this in the mail? How does it actually work out? Are there fees involved?
All right, Liberty. First of all, I'm going to say that you are not qualified to take delivery of oil.
Okay, so that's where I want to get to. So let's start with silver.
Mild a little bit. A crude oil contract or a gasoline contract or a heating oil contract, it's 42,000 gallons. Now, crude oil is denoted in barrels. It's 1,000-barrel contract, but each barrel is 42 gallons. There is no way that you can take delivery at your home of crude oil. All right, but now that's my little humorous attempt for you. But I will say that if you did decide to take delivery of crude oil, you're going to get it in somebody's tank. Somebody's going to have somebody like Exxon or somebody like that has crude oil. They may be short, kind of like the Bullion Bank example I used earlier for somebody, that they might be short the crude oil because they've got it in stock and they don't want the price to go down. So they're short. And if the price does go down, they'll deliver it to you. Well, you're just going to take title to the crude oil, to the 1,000 barrels of crude oil that's in the tank. But I do not want any of my clients taking delivery of anything other than silver or gold, platinum or palladium. I don't want you getting soybeans. I don't want you getting corn. I don't want you getting wheat. But there are ways to redeliver before you end up having to have the trucks back up and dump it in your swimming pool. All right. So
what about lumber if you want to buy a house?
It's not going to work because the lumber contract is 1,000 lineal feet, I believe, or 15. I don't trade lumber, but I think it's a lineal feet of a 2x4 contract. And you could hedge if you were going to buy a house because lumber has come way down. It was $1,500 per 1,000 board feet, lineal board feet, if that's the right contract size. And it's come down to like 500 or 570 or 480, something like that. I don't watch it. I'm not, the guy to trade. But if you were building a big, expensive home and you wanted to hedge lumber, you'd want to do it now while it's, $500 rather than when it's $1,100 or $1,200. And that would help cushion you against an adverse price move. And the adverse price move for your question would be the price of lumber going up if you're going to build a house. If I can now, I'll just address how it works, how the silver works and what the fees are. All right. So first of all, if you say to yourself, I want to buy, Jim said I can buy silver with no premium. And that's totally true. All right. So if you bought silver with me on yesterday's close at 3 minutes to 5, let's say, and your trade price was $18.70, all right, for December silver. All right. You don't have to fully fund that account until the last business day of November. That's the first notice day of the delivery period. All right. The short decides when the futures contract is going to get delivered. He owns the silver, the physical silver, but he's short to you. You bought a futures contract, somebody sold it to you, and if you're long in delivery period, that last business day of November, then that short, you can pretty much count on that short has the physical, and you're going to get delivered on sometime in the next 28 days, 28 tradable days. All right. So how it works then is, if you remember, I said the money changes hands. The futures gets settled on T+1 and T+2. The money gets transferred for the physical silver. So now you own the short silver. It's no longer his, it's yours. The cash is no longer yours, it's his. So you own the silver, and it's in a commodity approved warehouse wherever the short was holding it. And I think there's like 9 or 10 of them. And you don't get to decide where it is. But if you've got one that you want to have it in, after you receive it, after it gets delivered on, you can have the Brinks truck move it from one warehouse to another. Or if you decide, you can have it sent to your business office. Although there's fees for that, there's transportation fees for that. And there's another fee, I believe there's a fee per bar to take it out of the warehouse. All right. Now, if you decide to have it sent to your office, it'll get there whenever you have to arrange transportation. And it's somebody like Brinks or somebody like that. There might be one more approved transporter that'll get it to you, and then you'll have to sign for it. And then you own it outside the COMEX system. It's out of the warehouse, on its way to you. It's yours. It's insured until it gets to you, and then you decide to put it in your safe or to. Some people on Twitter have been taking the bars and cutting pieces and selling the pieces for $5 over spot. They're making $5 an ounce for cutting the bars. They stamp them with the weight, that kind of thing. And some people may have seen that on Twitter. I think I'm following one of the guys that does that. So after you receive it at your office, it's yours to do whatever you want with it. You can sell a bar to an uncle. You can give a bar to a son or a daughter at Christmas time. And it's 1,000-ounce bar at $20. It's $20,000 a bar. So what else, Liberty? What else might you want to know?
So that is awesome. That was way better than I expected. So just give me an idea, because obviously I'm ditching the premium, but there will be some fees involved with the shipping and the Brinks and all that. Can you give me a rough estimation if I spend $20,000 on this bar, what it'll cost me to get it home?
Liberty, you didn't spend $20,000 on a bar. You spent $18,000, $18,700 on each bar of 5. You have 5 of them. Now, I want to qualify that. There's a mini contract. There's a mini contract that you can trade a futures contract on that's one 1,000 ounce bar, but nobody talks about that. All right, they're thinly traded, but they are available. If somebody wanted to have one, you can trade one. All right. So in answer to your question, let's say the transportation to get that silver to you is $300. Okay. Let's say that the loadout per bar is $20 a bar, so that's $100 because you got 5 of them. So let's say it's $400. There was one commission, okay, through your broker, whatever broker you used. There was one commission to buy it and then get delivered on. So you had to pay that. Let's say that was $75. So I would say that your total fees might be $500 to get 5,000 ounces sent to you. Does that help you?
It does. Thank you for that. What's up, Chapman? Oh, wait, you were going to get to Jabroni.
Real quick for Jabroni, you're kind of joining us. So I think Liberty might be going to the New Orleans conference. You think you might go there also, right? And I got asked too, what did you think of Chen, that guy at that last conference? I don't know if you saw his speech or not. I can't remember his full name, but he's real bullish on silver too.
Oh yeah, very cool. Yeah, I'm gonna be there for sure. I'm already locked in, so that'll be good. We should meet up there. Probably have plenty of opportunity to grab a drink or something. But yeah, I don't know the last space you're talking about. Could you
Chen
refresh my
Lin, I
memory?
think that's his name. He was a presenter there. I don't know if you saw his speech or not, but
I don't know if I mean, if I did, there's been a lot of them. So if you have some
he's Asian,
specifics,
if that helps.
No, I know. But like, what was he talking about?
I think he's big on like silver solar panels, but like the silver use in them. But I don't know what he's.
Well, I could tell you like generally what my thoughts on the EV and like the solar panel usage and things like that. I'm actually a little contrarian in that sense. I think it's a little overplayed. I do think there's a lot of use that comes out of it, and the utility is there. There's a huge supply deficit in silver. I think it's been that way since 17 or 18. So, you've had a shortage, and then you add in the fact that a lot of silver production is byproduct. So in Europe, especially, you're seeing these smelters and refiners shut down. That's going to further crimp supply. You're seeing a lot of discoveries are silver is a byproduct. There's only a handful of like producers that do silver exclusively. So when you have these constraints, it's very hard to turn on. It's not just a matter of like, oh, we need more silver, we'll go out and do just that. A lot of times it has to be, in conjunction with other metals. So, all those things kind of make the bullish case for silver. But at the same time, I'm thinking, if we're seeing a kind of a sea shift in EV and ESG generally, as this year goes on and we go into an energy crisis, is that going to dull the kind of enthusiasm people have for this ESG adoption? Is that going to shift more towards nuclear? Like, you'll see more copper utilization if we continue with nuclear at the expense of solar or wind, but that could, maybe dampen the effect of, EV adoption, or definitely solar, I think, is going to be less attractive after this next 12 months because people are going to be like, well, what the hell, So I don't know. I could see it going both ways. Overall, I have irresponsible amount of money in silver, so I'm still in the trade, and I just bought some silver. I'm probably going to buy some more later this year, but I am pretty mixed on it. I do think there's some warning signs out there. And I just think in general, these commodity trades tend to take a lot longer than people think. So if you're going to play it in anything like options or, using leverage, be very careful because, you can talk to some of the veterans here who've been in silver quite a while. If you bought a bar a while back and just buried it, you're probably doing okay. If you bought an options contract, you may not be doing so well. So, and that's kind of my experience with it, at least.
Good stuff. So, Chapman, what's up?
Oh, I just had a question for I think Jim. What's the fees for storing silver in the COMEX warehouses, if there is one?
Chapman, there is fees. There's fees because you're using warehouse space, and there's also insurance involved. So I can check on that on Monday morning with our delivery department and get back to you if you wanted to. And
I mean, is it sure, I'd be glad to hear about it, but is it material off the top of your head, or
no, it's
okay,
not that big a deal.
okay,
But in futures contracts, it's inherently priced in. So like September's in delivery now, and September futures will be different than the December futures. The December futures, there might be that silver is probably already bought by the bullion bank, and he's already short that December. He might have been short that December back in April or May. Okay, so but instead of charging interest from the traders, from the longs and the shorts, it's just inherently reflected in the price. Now, once in a while, things in the future are priced lower. Like in a normal market, the November soybean contract is going to be priced less than the July contract. But in silver, because there's no new crop and old crop month, silver is just basically you're paying the premium, a higher premium for the when you buy the December contract than you do for the October or the September or the July contract because it's more time. So that interest and that storage is reflected in that price of the December futures contract when you contract it. And so, like if you look on the board at a deferred contract from December, let's say March, the March contract is probably 20 cents or 18 cents per ounce more than the December, and that's to make up for that storage and insurance for the rest of that month. But after you own it, if that's what you're asking me, after you took delivery, and I don't know why anybody does take delivery because it doesn't make sense. If you're well versed in futures, you know about leverage, and the leverage works in your favor. You have to outlay at 20,000 at $20 an ounce. You have to outlay $100,000 to take delivery when you can trade that 5,000 ounce contract for $8,000 of margin. But in answer to your question, there after you take delivery and you own it in the warehouse, you're likely to get billed a monthly storage and insurance fee. I'd have to check on how much that is. I could check on Monday and try and find you. Let's see. Hang on. You follow me, so I could send you a direct message. On Monday, probably after 10 o'clock in the morning.
On something like that, I think like to me, it's less a question of expenses, and it's like, why do you own it, right? Like if it's like in a short-term investment where you're trying to trade it, I get it. If it's a mining stock, like for me, most of my portfolio is in mining stocks, like 80%, just trying to make money. But you're actually talking about actually owning the silver. I actually can't think of a good reason to actually buy silver on the COMEX and hold it there, right? Because like the safest asset in the world, the U.S. Treasury, just got confiscated this year. I find it very hard to believe in the scenario where you really want to own physical silver, that like owning it and just like an exchange is going to do you any good. So it's one of those things like you could pay me to keep it on the COMEX and I wouldn't do it because I guess like I just don't think it's a financial situation. I guess to me, I just can't wrap my head around that.
Well, Austin, there's, as I mentioned a short time ago, there's 324 million ounces of silver on the COMEX that somebody owns. And so not everybody shares your opinion or where to put their money. Some people have it, and maybe people in this room. I have some physical silver. I think I've got one coin of gold, but some people have got physical because they figure that, well, it's concrete. Some people say that physical silver and physical gold are held for one big reason, that it's nobody else's liability. If the computer shuts down, the Bitcoin goes away or your stocks go away, unless you can reach them by the phone. But if they're held digitally, you don't own them. But if you hold a bar of silver, a 100-ounce bar of silver, or a bag of constitutional silver, 1964 quarters, you've got that in your hand. You can take those out and you can trade those for somebody to cut your yard, wash your car, do your accounting, something like that. So there are reasons maybe different. You're holding stock. Maybe if you're holding stock, you're not holding anything physical in your hand. You've got trust in the company that you put your funds with to act as your brokerage, and they're holding them for you in their account.
Very fair. It's a very personal decision for sure.
Go ahead, Jabroni.
Yeah, no, I don't know if you guys are familiar with. I know Jim Forsyth. I can't remember the name of the actual company, but they do they buy the bars off the COMEX and they take delivery. Part of the silver squeeze type thing. They were like, let's pull this off the exchanges and basically kind of the idea was that they're gonna try to go after the real big kind of players. But I mean, in theory, it works, but I don't know how. I'm a little skeptical. I do think it's cool. Those bars are really sweet. I tried to find. I'm looking for them right now to see if I can send them up on the chat. But if you guys, I'm kind of curious. Your experience, Jim, in dealing with futures and stuff, because that's a little bit beyond me. I'm not as familiar with it, but back in, I don't know, a year and a half ago during the silver squeeze and stuff, they were all talking about how everything's leveraged, everything's manipulated, and it's a common refrain among commodities investors and silver people, especially. It just seems to me like I keep seeing over now several years, people how much silver is coming off these exchanges. It's like any day now, and it reminds me of that little meme GIF thing of the truck that like is about to hit the pole, never does, and I'm just sort of like tuning it out at this point. Like, it's just, if you're in this, don't just buy into like, oh, any day now it's gonna blow up and we're gonna moon. It just don't be trading off that, is my gut feeling. I don't know if, since you seem like you have much more realistic expectation and familiarity with this, I'm kind of curious what your thoughts are. Do you see this stuff? Do you know what I'm talking about? Or, and also, like, if you do know what I'm talking about, like, is that just all foolishness, or is it actually something, you think is impending?
Jabroni, thank you very much. I do know exactly what you're talking about. There's some people on Twitter that it seems like weekly or at least monthly are keep advocating buy some silver and crash the COMEX, if you've heard that term. And then other people are out there saying, there's one gentleman who's a real sharp guy, and he posts a chart sometimes daily, but I'd say several times a week, of the difference in registered stocks. And the registered stocks, as I mentioned before, it's all the same silver, whether it's registered or eligible. It's all the same kind of bars. It's just that how the owner decides to carry it in the warehouse where the silver is sitting. And it's my opinion, Jabroni, that it is kind of a comical, nonsensical opinion for these people to say we're going to crash the COMEX. Maybe they've been saying it for 5 years or 7 years or 8 years, something like that. It hasn't happened. And if you just stop and think, in my example that I used about the Bullion Bank, about the two-way trade, the first leg of that trade is to buy silver from the miners. So as long as the miners are producing silver, the silver inventories at the COMEX warehouses are going to fluctuate both higher and lower. And so if silver starts trading $30 or $35, the miners are going to maybe run 2 shifts. Maybe they'll run 20 hours a day or 18 hours a day if they can, something like that. One way to watch it is this time of year, starting in the next week or two, there's a TV show called Gold Rush. And they've had a young guy that's been out producing some of the veterans for the last 6 or 8 years. His name is Parker, and he's fun to watch. But sometimes he'll go out and say, the price of gold is way up there now. And he's right. It's Uh, 7 or 8 years ago, when he was mining, gold was $1,300. Well, gold got up to $2,070 last year, and or in the last 12 months. So no wonder he wants his crews to be mining as much as they can. And then once in a while, you see they do a gold weigh, and once in a while they'll show the ingots that they melt them into these ingots, and then those ingots will go to a refiner. You know, a refiner will buy them, or a bullion bank will buy them. I don't know if Parker Schnabel has got a relationship with a bullion bank, but the miners, the mining companies have relationships with the bullion banks, and that's one reason why you'll see the COMEX inventories maybe increase. And it might be that maybe, some of these big silver mines, maybe they've got a quarterly sell or a monthly sell to the bullion banks. But the bullion banks, once again, they're in it to move that silver. Once they get it from the bullion banks, they want to sell it for their price plus P, and the P is their profit. And then they'll be delivering it, maybe in the next 2 or 3 months in the December contract, or the big delivery contract after December is March for silver. So then after March, it's July. So in answer to your question, I think it's Hui. Silver and gold have been trading since, I believe it's 1974 or 1975. I started in 1986, and the COMEX has not shut down in my career. I will say that there was one time, I believe it happened in platinum, on the NYMEX exchange, not the COMEX, but the NYMEX exchange. There was a threat of a hurricane in New York, and they declared, I believe if I remember right, they declared force majeure for a day or two in the delivery period, where they asked the sellers, the shorts, and the buyers to give it a day or two until the hurricane cleared. You can Google it if you want to. Force majeure at the NYMEX, NYMEX exchange, and you'll probably get the dates. I believe it was due to a hurricane. But otherwise, the COMEX continues daily. They're opened every trading day except holidays, and faithfully, it keeps running. And I will be the first one to warn everybody on Twitter if I see something that changes my mind. Hopefully that
Yeah.
helps.
No, I appreciate that, because that's kind of my sentiment. And again, I'm not the most technical guy here, but I do kind of pick up pretty quickly in things like I feel like are, I don't know, I wouldn't say scammy. I think some of these people, the problem is some of these people really do believe, so strongly that the financial system is a disastrous, rigged game that they sort of like start to substitute everything in. And I mean, it is really frustrating how hypothecated everything has become when you have these exchanges. But at the same time, I think people really need to understand, like, these markets function not only as a mechanism to manage economies, but I mean, they're at some point they become like a national security apparatus. I mean, this is a mechanism for people to kind of quasi ration through a capitalist-esque veneer. So to think that like a bunch of retail guys would have any ability to overcome a system that's rooted in fiat, controlled by central banks, is just like, I don't understand where they don't match. They're paradoxical concepts, right? So, I mean, it's just
I think that what has happened is that, we've got, I don't know, let's say there's 300 people in this room. Maybe 10% of the people that are listening tonight have read on Twitter that buy an ounce or buy 15 ounces and crack the COMEX. They may have seen that, and they get some crazy guys bias against paper, against futures trading, that I read it, so it must be true. It's not always the case. Where I will
right.
say, Jabroni, that there has been some fraud. I'm in the state of Florida. I came from Minnesota and I moved to Florida in the mid 1990s. There have been some coin dealers in South Florida that have committed fraud on asking customers to send money in. And there have been actually some banks that have committed fraud by asking customers to send money in, and they purport to be buying the metal for people, for their customers. Then they charge them storage and insurance, and it turns out the banks never bought the metals for the customers. So there has been some fraud committed that way. I'm familiar with some of that, but I'm not familiar with any COMEX fraud, to be honest with you.
Was that Austin saying something about not really understanding why you'd buy to store the metal? I think that was, I can't remember who was saying that, but I agree completely. If you're going to buy silver physical, either do it as leverage through a miner or option or future or whatever, or just hold it. Like, what do you? I don't really see the point otherwise, because if you don't control it, you never know. And
Well,
and exactly the systemic risk that we're talking about is, it's not going to be there for you if this whole system does, for whatever reason, collapse or implode. You're not going to get your silver. It's not going to be there for you.
Jabroni,
Yeah.
you can search, you can find out. Some of these banks are well-known, very large banks that committed this fraud for their, against their customers. So it's kind of like, caveat emptor. I think it is beware
Caveat
of.
emptor, yeah.
Yeah.
It's well, again, and this is the thing I'm trying to say. Like, the greater point, you summarized it perfectly. Is like, I work for a bank. These people write off charges. I mean, in many cases, nobody's going to go to prison, or if they do, it's some low-level trader, right? So it is a very profitable write-off to get caught doing something that will amount to essentially fraud. You or I would go to prison. These people, they maybe pay 1 to 5% of their overall profit in a fine to some regulator, and then they settle. So, it's just, people shouldn't get greedy. Don't get in the shitcoin mentality with this stuff. Like, you're trading to make a profit, or to, store money off the grid so you have resources available in bad scenarios. Like, that's what this is for. This isn't to, like, you're not going to become like a Dogecoin millionaire trading silver, in my opinion.
My point in bringing this up is that the cases of fraud that I mentioned, it has to do with the physical market, not the futures market. And yet we've got the people writing on Twitter about how fraudulent the paper COMEX futures trading is. And I'm here to, answer questions to the best of my ability. If I don't know the answer, I'll find out the answer. But to maybe dispel some of this nonsense that uneducated people are spreading, some of the fraudulent commentary on the futures industry. And the futures industry, once again, it's government regulated by the CFTC, analogous to the stocks and bonds done by the Securities and Exchange Commission, SEC. I believe they're sister agencies. And actually, the guy that's in charge of the SEC used to be in charge of the CFTC probably about 7 or 8 years ago. His name is Gary Gensler. So,
well, right, and I guess this is, I don't want to go on open up a rabbit hole, but I would say, as someone who's very, very, very skeptical of most forms of government, I don't find that particularly at all reassuring. But what I will say is, I do buy into the idea. Like, if you're familiar with the nickel exchange that went parabolic recently, again, if you're trading off these things expecting to make a crazy amount of money, these are strategic materials. They are managed by the states to be available for, ultimately, when it comes down to it, like national security, continuing economies, and all that. They're not going to allow. There will be force majeure. They'll reverse trades. You could be 100% right. Be looking at $1 billion net profit on paper. They'll just reverse your trade. I mean, if it comes down to it, the system being stable is more important than capitalism for the bureaucrats that run most of these exchanges. They will not allow a economic collapse, and I think that's become pretty well established in the last just year or two. If you look at all the dramatic steps that these different agencies have done. So again, I would caution anybody who's investing like crazily, thinking that they're going to make like life-changing money on trades. There is a margin in which you will be kind of like they'll give you a haircut, I guess, best case. And at worst case scenario, they'll just, like literally reverse your trade. You could be completely right, do everything, and it's analogous to like them seizing gold or something, you know. But that's kind of like my read on it.
Yes. Jabroni, it's like you're in my head sometimes. I agree with everything you just said. And I would think about this like more long term, even out of just like crazy situations like the nickel thing, like that. It's like, let's just say that my thesis is right. I'm wrong about almost everything, right? So like, let's see, maybe I'm wrong. I personally am very, very bearish on supply long term. I think it's gonna be very stagnant to maybe even decrease, particularly some issues around just like recycling being non-economical at higher energy prices. And I'm pretty bullish on industrial demand. I think these governments, they're not gonna do the rational thing and pivot to fully energy and natural gas. They're gonna print, baby, print. They're gonna build more solar panels and pay you to drive an EV, whether the math makes sense or not. I think that industrial demand is already 64% of mine supply. As this stuff catches up, I agree. I think the COMEX will continue to run. Apple's going to get their silver. Tesla, they're going to get their silver. Is Austin, is he going to get his silver if this really takes off? Is Jabroni going to get his silver? Probably not. I just think that the odds that if this really works out, that you get completely screwed are too high, that you're better off paying that premium, because that premium right now can really be thought of as a tie to energy, because premiums are not necessarily, there are some like refiner and mint capacity issues, right, that like have raised premiums and they're making more profits. A lot of it's tied to energy and inflation. These premiums will continue rising as energy costs and inflation rises over time. That like, I think that you're going to make your money plus some if you hold this stuff for 10 years on the premium. That if a sovereign nation's US treasuries, the safest reserve asset on the planet, can be confiscated, I just don't see any argument that Austin, Jabroni, or Alex's silver is safe on the COMEX. I just can't mentally get there, but it's a very personal decision, and I respect everybody's differences.
All right, Chapman, you got your hand up. Monative, if you'd like to come up next, you're welcome right after.
Oh, I was just gonna say, if I ever hear the word parabolic again, I'm just gonna scream. I'm tired of hearing that word. It's almost as if I'm tuning someone out if they say parabolic. Like, what are you trying to sell me, buddy? So, I just wanted to say that. Thank you, everyone.
Yeah, my losses this year have been parabolic.
Well, the next move in silver will be on a parabola. Monative, what's up?
Hey, good afternoon, guys. Thanks for inviting me up. I just wanted to, first of all, I wish I'd seen this space a little bit earlier. I'd have joined. Probably a lot of information I could have used. But just wanted to add a quick thought, or my thought on what you talked about, the nickel run-up, right? So a couple of things. LME is messed up. It's now owned by the Hong Kong exchange, so it is sort of beholden to the Chinese. Unfortunately, it used to be a well-run exchange, 5-6 years ago, and it's gone down the drain rather fast. Nickel was a strange situation even for them. Nobody expected that kind of screw up on their side. So the number 4 nickel producer is a Chinese billionaire who had a short position more than the physical holding of nickel in all of LME's warehouses, and he just plain refused to close the trade. And JP Morgan happened to be on the other side of the trade, on the hook for like 9-10 billion at a, even if it was to be settled immediately, and probably 12 billion if it dragged on. So they had to just close the trading. It took them 2 weeks to unravel it. So it was a strange situation even for a screwed up place like LME. But I'm not saying that, well, okay, I don't think we'll have that egregious a situation again, but I would be very careful trading metals that are primarily traded on LME, because they are under the control of Hong Kong Exchange now, and that pretty much means the Chinese control it. Anyway, that was just my thought. I wanted to add that.
So, are you an investor, or what's your background, if you mind me asking?
So I'm an investor. Metals are just a position in my portfolio. I'm not a metals investor. I invest mid to long term, anywhere from 3 months to 3 years typically. I am by my primary trading methodology is market rotation, sector rotations, and market cycles. So I do have a small part of my portfolio always in gold and precious metals, just because I like it that way, and it's not so much a hedge for me as it is a small level of comfort. I was born in India. I've lived here for longer than I've lived in India, but I'm a US citizen now. So gold has always been like the thing that Indians buy and keep for safety for life. It's always bought, never sold. So maybe some of it is from that habit, if nothing more. But I do like industrial metals, though again, the Chinese usage skews everything, because it's not really their usage as much as when they want to build their stock and when they want to start depleting their stock. And that's I think been whacking pretty much all the big metal mining companies sideways for the last better part of a year and a half. So I do like copper and nickel. I have a good size position in Vale that I've been building, but again, Vale will only move because of iron ore, because that's such a large part of the company. So they do have gold and a few other things, but because iron ore is such a large component of Vale's business, even if everything is firing completely well, they need to have iron ore start moving substantially for Vale stock to move. But I have a good time horizon. I'm still profitable on that trade. I buy, closer to 10 and I sell when it hits about 15, 16, and then I just swing it back and forth. I'm not much of a short player. I just wait for it to fall and then pick it up again. Just me. It's just my comfort level. So that's what I do. I watch for sector rotation signals and get into sectors where where money is flowing. That used to be a good, it took a quarter to confirm a signal, and then the signal would run for about two more quarters. These days every rotation is compressed. You get a signal, it fires off in a week, and then by the end of the month the rotation is over and people are selling off. So it's not been super efficient way to trade for the last 6-8 months. So I'm mostly doing swing trades and holding on to some core positions. Anyway, that's me. Thanks for letting me speak.
Absolutely. You're welcome anytime. We do this every Saturday night at 7 o'clock Central. So thanks for coming up and sharing. I actually sympathize with the way you're playing the markets right now. I'm doing the same thing. I'm doing lots of swing trades on medium-term pivots, and I'm just watching the technicals for my entries and exits, and I'm holding core positions along the way. So I'm doing the same thing you are, and for me, it's been working out pretty well so far. But yeah, I appreciate your strategy a lot. I do the same thing. Remember, if anybody else wants to come up and join in, bring anything new to the discussion. If you've seen any news you want to talk about, if you got any questions about gold and silver miners in particular, you're welcome to come up. If nobody has anything else, we can go ahead and call it. It's been a pretty good run tonight.
So, Liberty, do you have any news on your interview thing, or anything about that? Or
Yeah, it's scheduled up. It'll be early next week. So we're
All
going
right,
through
we're
it.
looking forward to it, and you'll be fine. So,
Is that Palisades?
Yes, it is.
Hey,
So obviously a major honor. I guess don't screw up now, right? So it's
Yeah, I don't
obviously
know.
very exciting.
That'll be good, man.
hey,
Exciting.
Liberty, I've followed you. Do I get alerts to all these? Do you post them?
Yes, you will. I post these at least a day in advance, but I'm trying to be better by getting them out a couple of days in advance, and you can set the reminder. So the short answer is yes.
and you put these on YouTube as well, right?
Yeah, when I
How?
have time, it does take a little bit of time since I got to go back and record it and then putting all the timestamps in. I really appreciate timestamps, right? And I want people who come to my channel to have those timestamps. I think they're invaluable, and that takes time because I basically have to sit through the interview all over again, which is fine. I actually appreciate doing that, but the process from the beginning to the end takes time. So I don't always have time to get them all up. But this one, likely, I don't see why not.
I'd like to thank you, Liberty, for all the questions that came my way tonight. I appreciate all the questions and the opportunity to help people.
Well, I guess I'll just say before we close out, and
and
I'm happy with my silver positions so far. I'm going to be adding more to them, and yeah, they seem to be going up nicely. And I think as long as I think that it sort of feels like maybe silver's bottomed here, and this is just a great time to buy. So yeah, there's that. So
You talked me into it.
yeah, I know it's so hard, but yeah, I mean, I'm pretty. They seem to be stable, actually. It's not. I know this is sort of like. It's like, oh no, it's silver, you know. That doesn't do that. So maybe this is just a moment of reprieve. But yeah, so far it seems like they've been my least volatile holdings. So, oh, I'm not 90% cash anymore. Just dispel that right now. So, anyway.
I was doing a little bit of TA this morning, trying to. I'm not like a pro or anything, but I was looking through my trading view and a lot of the names I have. And it is pretty crazy how low they've gotten. It's like, and it seems like they have started to base a little bit. So if you guys have anything you've been looking at, on top of that, my Twitter sentiment meter from all the people I follow, it's kind of like just baselined out. Like I feel like we've kind of flatlined a little bit. So it's interesting that you said that, man, because I was thinking about that this morning actually.
And another quick comment before we go is if you're looking for a stock, Steve Penny has a very good newsletter. It's only $9 a month, and that's a great place to start to look. He has a very transparent portfolio. I've been a subscriber to him for a really long time, and who knows, we might have him on sometime. So we'll see.
Yep, and on that note, we may have Jeff Clark on by the end of the month. We will likely have on Don Durrett again by the end of the month. And going forward, we're going to make more of an effort to have more guests on. Largely, it's been due to simply lack of reaching out. Just been so busy, so busy. I just didn't have time to even make an attempt. But we've got more people lined up in the short term. We're going to make sure we have more lined out in the long term, especially as we start to get some traction here, which it looks like we're about to do in the sector itself. I think you'll see a lot more people interested in participating, and so I think we're headed that way. But that being said, thank you everyone for contributing. Again, I'll post this back up on YouTube. There were a lot of novel companies mentioned tonight. Jim mentioned some. Austin mentioned some. We had a prior guest, Eric had mentioned some. A lot of great companies were discussed tonight. A lot of due diligence we can do to go track them down and see where they are. But we'll get that all posted for you guys. And with all that, enjoy the rest of your weekend. We'll see you next Saturday night.